It always has been. It always will be. Guys, just being patient. That's what we're going to do today. We're going to have a good time. I'm excited. I'm excited about today. It's going to be a great week. Going to stay focused. And we're just going to keep making it easier and easier, guys. We're going to keep it even more laser focused on the best of the best. Go through our routines. I'm Mark, by the way. Welcome to the room. um, Guys, every morning I go to forexfactory.com and I do this because I want to know when the major news releases are. And I'm going to be real honest. I couldn't care less what the major news releases are. My goal is to have an advantage. Every time I make a decision about entering the market, I want to be sure that I have an edge. I want to make sure that I have an advantage. And one of the things that removes an advantage so quickly is trading into a high impact news release, one of these red boxes, or trading into even a medium impact news release. That can mess up your fun. So every morning I come to forexfactory.com/calendar. I drop the link in the room for you. And I'm just looking to make sure that there's not a news release. And today's Monday, August the 12th. And we're good. We're clear sailing today. So now all we have to do is look for our rules to be met. Anytime I see high impact, I don't even go past this high impact. I could take a picture, and if all I had was that and not knowing what it was, then I know without any question that at 8:25 tomorrow morning, I'm going to stop trading. I'm going to exit a position and I'm going to stay out of the market in case there's an emotional response. A lot of prop firms don't allow you to trade into news, guys, and there's a reason. It's because people get slipped and knocked out. I've done it. My record trading into high impact news is a $2,000 slippage. That was a pretty costly mistake, but it taught me a wonderful lesson. So every morning, guys, check in news. And then everything that we talk about every day, same thing every day. I am the most broken record you will ever meet. Everything comes from the trading page off of the Nexgen website, guys. All of the rules that I discuss, what it looks like, what they mean to you, how to identify them, all of that. Hey, good morning, Steve. All of that's available for you right here. But even with all of this information, guys, and there's a lot of information, we're going to focus in the first hour really on just one thing. We're going to talk about a high probability trend trade. We're going to talk about a trade that typically wins 70 to 80% of the time. We're going to talk about a trade that creates a lot of confidence through the memory of success. And guys, most importantly, this high probability trend trade, when each indicator on every chart agrees for the trade, triggers are the strongest, nothing in the way, no termination conditions, guys. This is the trade that teaches you to become a chart reader, that teaches you to read your charts. And we're going to start the slideshow from that phrase. Good morning, Erla. You guys are going to learn to read your charts. This is my number one goal for everybody in this room. And I know that sounds silly, right? But Mark, I signed on to my demo to be a day trader. And I signed on to my demo because I want to make $1 million in my first week. And I want to be successful on day one. And guys, I'm going to give you the path to success. Hey, good morning, Jen. Nice to see you. You still on vacation? It's funny, when people disappear from the room, I miss you guys a little bit. Andy's doing the same thing. He's cleaning up, and it's weird not to see you guys. Still here? Awesome. My flight got canceled. I was on my way to Italy, and then something came up. Until the end of August? Outstanding. Lucky you. Sunny and hot? See, that's just the way I like it. I'm in Texas. 10 months out of every year are sunny and hot. Good. Well, enjoy yourself. Are you trading at all, or are you just vacationing? Or working from a different place? I don't know. It's nice to have those options. It's fun to bounce around a little bit. I've done it. Good stuff. Trading for 3 hours. Internet is so slow. Feed the gerbils. Right on. Well, it's nice to see you in here. So guys, we're going to learn to read our charts. The three rules for the high probability trend trade, guys. This is going to turn you into a chart reader. This is going to turn you into somebody. Nice to see you, Jen. Good morning, PFI. Hey, Red Rob. 75 and low humidity. Very nice. In Central Illinois. Guys, this chart reading that you're going to come into, this is about 90% of your day. And it's true, and that's why I posted that Tom Petty video. The waiting is the hardest part. 90% of your day, guys, is going to be spent just waiting for things to come together. 90% of your day is going to be spent waiting for some simple advantages to fall into place. 10% of your day is going to be pulling the trigger, if you will. And just for perspective, guys, if you spend 6 hours sitting in front of your computer, which I hope you stand up and take a break, but if you spend 6 hours in front of your computer, you might be active 36 minutes of it. And the way we teach, what you're about to learn, doesn't put you in every move in the market. You don't have to be in every move in the market. The goal is that you're in the best moves, and that's what we're going to focus on, guys. We're going to focus on identifying the best moves, and we're going to do it with 3 rules, just 3 rules. And each rule is going to create an advantage, guys. This is your high probability trend trade. Will you guys excuse me just 1 second? I need about 30 seconds, and then I'll be right back. We're going to focus on 3 rules. That's it. We're going to talk about strong triggers. We're going to talk about no termination conditions, and then an entry area, guys. Your first rule will give you the advantage of momentum, of a market that is likely to continue in the direction of the trend. And guys, this is a huge advantage and such an important part of what we do. The second rule is going to make sure that there's nothing in the way. Most of you guys show up to Nexgen because of the word Fibonacci areas. Guys, you're going to know exactly where the people that move the market are likely to stop. You're going to understand where the market may bounce, where it might take away your advantage. You're going to be able to see that and have a very simple rule to know whether or not you have a clear shot to your target. And once you learn these 2 rules, and I think this is the thing that I really want to stress today. Once you understand momentum and a clear path, the world is your oyster. Once you identify these 2 very simple concepts of when a market is screaming in the direction of the trend and there's nothing to create a bounce, guys, you're going to find your entry. You're going to find your trading plan. You're going to find what really speaks to you when you look at this software. And it's just like anything else. Like, everybody has what appeals to them. And it's going to be based in momentum and a clear path. I can almost guarantee that. And momentum and a clear path are enough to create a very profitable, very consistent trading plan. But initially, until you've got the time in, until you start to recognize these things, we're going to focus on the entry area for the highest probability trend trade. That's what rule number 3 is going to do for you. Hey, Trading Book, good to see you. And this is going to put you in the market where the market is most likely to continue with the trend, guys. So we're going to focus on these 3 rules, keeping it very simple, very focused. And we're going to do it on only 2 charts. Hey, good morning, Zorro. Good to see you too. And I want you guys to really latch on to the idea that simplicity is the key to success when you're a brand new user, that less is definitely more. We're going to use only 2 charts, and we're going to use a large chart, which is very much a broad stroke of a brush, guys. It's the big picture. It will define the direction of the market through the background color. It will define the momentum in the market through rule number 1, and it will define whether or not you have room to the target, that clear path that we're looking for, through rule number 2. All of this happens on the most current bar. You're going to have all of this information coming from the most current bar. Once you have it, once the big chart says, hey, guess what? Let's look for an entry. You've got what you need. Let's pinpoint where the market is most likely to continue. That's when you're going to come to the smaller chart. This is the faster chart, guys. And all it does is it refines the broad stroke of the brush. It pinpoints where the market is most likely to continue. This is going to allow you to reduce your risk. You will maximize your profit potential, guys. And that's where rule number 3 comes in. Your first rule number 3 is going to be for the high probability trend trade, guys. And this is the best of the best. This is the highest probability. This is what's going to create confidence. And we're using these two charts because it's a reflection of who's running the market. Who are you trading with or against is the easiest way to think about it. The big charts are going to define the areas, guys. They're going to define the direction. They're going to define the momentum. They're the large crowd. They are the men and women with deep pockets, and they decide which way the market's going to go. They create the momentum in the market. They react to those key areas in the market. And really the path of least resistance, the easiest way to get what you want out of the market is to just tag along with these guys. Do what they're doing. But we'll use the small chart because there's always people that fight the large chart, the large crowd. And these are the small crowd, and they still have more money than all of us. And they can create little fluctuations in the market. You watch the market go up and down all day. These guys fail 80% of the time. We're going to pinpoint exactly where their failure is most likely to happen and use that for the entry, for the highest probability trend trade, guys. So 2 chart process, only 3 rules. And I'm going to tell you, without hesitation, that there is a step-by-step path to becoming a confident trader ASAP, and it all revolves around posting in the room. If you're on day 1, post in the room. If you're on day 1001 and you're not where you want to be, post in the room. Every time you post in the room, you're going to open up the door for a little private consultation. The 2 of us are going to talk about exactly what you see, exactly what you did, and if there's a way to do it better or a more accurate way to read the indicators, we're just going to have that conversation. Learn the trigger lines and the Fibonacci rules for when it's okay to trade. That's those 3 rules. We're going to focus an entire hour on identifying 3 very simple rules, how to identify it, how to study it, and what it means to you as a trader. Guys, simulate. Don't wait until you think you're good at it. Practice, 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 practice. Practice scaling charts and moving stops and entering the market and exiting the market. Practice writing on your charts, telling me what it is that you see. Guys, get all of that simulation in. And the goal is going to be that we get you to the point to where you're only practicing the correct rules, where you're giving yourself an advantage every time you enter the market. Because when you practice the wrong rules, guys, even if you get lucky, and you will get lucky, it's a short-term victory, but it typically sets you up for long-term failure. What you're doing is luck runs out, and it's almost like they have cameras behind you in your office. We're going to simplify. We're going to talk about 2 trades. We're going to talk about the highest probability trend trade that you can take, and we're going to talk about a trade that is very similar, but it requires a little bit of chart reading to enter and to manage. So 2 trades, you need to know what looks you're going to commit to. You need to learn them so that they become easy, and that's the second part of the step-by-step path, guys, is using the spreadsheet that I'm about to give you, that I'm about to show you. It's in your Nexgen study picks folder. I modified mine over the weekend, so I'm going to give all of you guys my modified one. I am hell-bent on simplicity this week, on keeping it super easy. I had some great conversations over the weekend. And your first tab is going to be your trade journal, guys. This is where you're going to put every trade that you take. You're going to take a picture of it, you're going to upload it to a cloud, and you're going to drop it into this spreadsheet. There's the instructions how to do it, and there's even instructions on how to annotate your chart. No audio, guys. Can anyone hear me? Give me a Y if you can hear me. Let's see if it's me. No sound? Ooh, if Hamid doesn't have it. Okay. Alright. Can you guys hear me now? I'm going to turn my screen back on. Did that work? Awesome. Cool. It's weird. That happens every now and then. Just likes to keep me on my toes. Oh yeah. I love that you put, oh yeah, Jeffrey. I see the Kool-Aid man every time you do that. So guys, this first page is just a trade journal. And one of the things you guys will probably notice is that the only two advantages that we're focusing, yeah, I know, right? Is I want you to ask yourself if you have that momentum through rule number 1, and if you had that clear path. Because what I'm finding, and what I found over 4 years of teaching people to read these indicators, is that when these two are present, life tends to be pretty easy. I see more winners. I see more winners coming from odds favorable momentum and a clear path than I do losers. So these are the two I really want you to focus on as a new user. And then the entries will come, guys. The entries will come in time. Man, Rob, I built a computer. I replaced a motherboard, put in a brand new chip, everything. My brother sent me an erector set, and I got it. I'm learning tech, guys. I'm going to get there. I'm going to get there. So this is going to be your tracking sheet, guys. Fill it out every day. But here's the deal. Don't just fill it out. If you really want to get the most out of this, you're going to have to come back to it. You're going to have to come back every morning and look at what you put into that spreadsheet, guys. And you have to ask yourself what worked and what didn't work, because all we do is trade patterns. And I think this is what people don't realize. Everything that you do every day with the software is just patterns. Patterns that repeat themselves. Still no audio? Guys, give me a Y if you can hear me. I want to see if it's me. Okay, so that's probably Ollie then. It's not me, Trimper, if you guys can hear me. On the new Super Screamer? Let me see. I don't know all the specs, but I'll show you how I benchmarked. Was that it? That's how it benchmarked. And I think that's got the specs on it. Guys, if you go through every morning, it's fast, Steve. It's weird. I've never had a computer this fast. And all you do is you take 5 minutes, guys. I'm telling you right now, pour a cup of coffee, check the news, and then open up your spreadsheet and look at what you did yesterday. If you ask yourself what worked, you're going to start the day focused on what works. And if you ask yourself what didn't work, you're going to have that same focus, avoiding the things that are costing you. And you're going to find that what feels easy and relaxed, and I love it when you guys write this on your charts, felt relaxed on this trade, wasn't nervous on this trade, or maybe, man, this trade felt forced, it got a little worrisome. Write it on your chart, because you're going to find that correlation between whether or not you're following rules. And doing this little study every morning, guys, that's going to prepare you for the day. It will accelerate the learning. But the most important thing is it's building the habits. Yep, Z-Robot, when I go through terms, I'll show you exactly how we're going to use them for termination conditions. When you go through this process every morning, all you're doing is you're finding the patterns that are bringing you success. You're identifying the patterns that are taking that success from you. And guys, that's one of the biggest things. When you post in the room, when you post that annotated chart in the room, one of my specialties, if you will, is recognizing patterns in you. I'm going to recognize if you like to jump in early or jump out late, if you're trading in determinations, if you're not using momentum. And guys, every time you post in the room, I promise you, I'm going to say something clever like, let me pick a name here. Hey, Hamid, I noticed that your last 4 trades were all in determination conditions. You got lucky on 1 and you lost 3. So let's go through a process of helping you identify termination conditions before you give your money away into them. And Hamid's going to be like, oh my gosh, I didn't even notice. And I know that it sounds weird. How do you not notice that you're breaking rules? Guys, you won't sometimes. I promise you, you won't. I didn't. I had to post my trades into my brother's room. I had to get that feedback, and it changed my world. These little conversations that we have every day will absolutely change your world. So we're going to do this. Focus on learning the looks so they become easy. One of the easiest ways to do that, guys, is I've got the 101 section here. Strong triggers, clear path, entry area. That's it. I even took out the 50-50, guys. I even made this more simple. As soon as you can identify strong triggers, as soon as you can identify when there's nothing in the way, guys, you've got everything you need to build a plan. I find that one of the easiest ways to stay focused on advantages is to know exactly what it looks like when the advantage is gone. And that's what the red section is here, guys. So we're going to learn both sides of the coin. There's the section where you're going to put your pictures to build your trading plan. And then there's the client trade section, guys. And this is, you know what? I'm just going to hide this. This is Nexgen users. About 400 pictures of you guys being great with the software, embracing the advantages. There's the high probability trend trade entries go in both directions. There's a management section. There's patterns that repeat themselves because that's all it is, right? And once you're good at the two advantages, momentum and a clear path, you're going to begin to recognize these patterns that you weren't even looking for, and they're going to help develop your trading plan. And then a whole section dedicated to termination conditions. This is the Mark Novak section because that was my weak link in the beginning. Is I was notorious for trading into lines that could stop the market, and I had to go through and start building an entire catalog of termination conditions so that I could commit to it and not trade into it, guys. So this is what's going to get you to where you want to be the fastest. Everybody fights it for whatever reason. Nobody likes to work. It's funny too because everybody in this room, I guarantee, was successful in their worldly endeavors, and for whatever reason, day traders believe that because they purchased a hammer, they should be able to build a house. Because they purchased, I don't know what else. I bought a scalpel. I should be a brain surgeon now, right? It's not it. We got a tool. We're going to learn how to use the tool, guys, but we're going to learn how to do it in the most basic, easy way possible. We're going to break it down. We're going to talk about 3 rules, 3 advantages, and we're going to start with strong triggers, guys. And strong triggers happens on the large chart. Large chart leads the way. And strong triggers isn't a difficult look. In order to have strong triggers, you have to be trading with the trend. So if the background is green, it's going up. We're looking for rules to be met for high probability trend trades long. And if it's red, it's going down. We're looking for high probability trend trade short. Guys, we're just going to go with the flow. That's all we're going to do. Strong triggers in an uptrend means that your small triggers, these solid lines, and your large triggers, these dashed lines, these 2 lines both need to be green. They need to be wide, not pinched together, but rather opening. And then there's space between the 2, guys. When the small triggers break up and above the large triggers, when this space opens up, and think of scissors that just opened, ready to cut. Guys, large triggers are widening, smalls are above. The odds are favorable for the market to continue up. Odds favorable momentum is what we're going to call it. OFM is how you're going to see it written on charts all day long. In a downtrend, background's red, small triggers are red, large triggers are red. Both are wide, angled in the direction of the trend. And then once again, when the scissors open, when there's space between the smalls and the large, guys, the odds are favorable for the market to continue down. Odds favorable momentum. What a wonderful phrase to feel good about the advantage of a market that's likely to continue. And guys, odds favorable momentum is the best of the best. Odds favorable momentum pushes that market. It's established by the large crowd. Odds favorable momentum has the potential to break those key areas, and odds favorable momentum will cover a lot of the mistakes that new users make, guys. Odds favorable momentum, strong triggers. Rule number 1, commit it to memory, insist on it. It's going to change your life. And then when your scissors close, when those small triggers work their way inside of the large triggers, this is what we call a weakening of the large triggers. When I have weakened large triggers, anything can happen up or down. I throw away my advantage of momentum, guys. And these weak triggers are where you're going to see those key areas more likely to hold. These weak triggers are where you're going to see reversals in the market, where you're going to see deeper retracements that are kind of affecting your good time. So when we go back and we look at a large chart, strong triggers are always strong triggers. It's that separation. When I have strong triggers, this is when I'm going to look to buy Fibonacci support on a smaller, faster chart. On a large chart, it looks like these tails. You're going to be able to pinpoint where these tails are most likely to form. Notice that it's capable of breaking areas. Notice that when the smalls push down, but areas tend to stop the market. But guys, odds favorable momentum. There it is again. Strong triggers. Strong triggers. It never changes. And then when I've got that weakness, more likely to reverse. When I've got that weakness, more likely to create an untradeable bounce. So there's a very definitive look, and this was, the S&P was struggling for a while. Weak triggers, that begins the push down. Is everybody good with that? That's rule number one. And to be honest with you, that's about as much time as we spend on it, because most people can recognize strong triggers within the first 5 minutes of being with Nexgen. Most people can recognize that green means up and red means down. If you're colorblind, let me know. I'll show you a trick. Otherwise, guys, this is rule number one, the advantage of momentum. And once you have momentum on the large chart, you're going to make sure that you have a clear path. You're going to make sure that no termination conditions are present, guys. This is going to give you room to your profit targets. And this clear path means that there's no key areas where the large crowd is likely to make decisions. When I say areas, this is one of the conversations I had this morning. When I say areas, all I mean is a line on the large chart. Areas are these horizontal lines, guys. These are where decisions are being made. So the areas that we're looking for, the lines on a large chart that we're looking for that can behave as termination conditions, divergence, highs and lows, guys. A magenta line from a high and a cyan line from a low. That's a fancy way of saying pink and light blue. This line may stop the market, guys. It's just a line in the sand where momentum was stolen from the buyers and the sellers pushed down. And this blue line is just a line in the sand where the momentum was stolen from the sellers by the buyers. We're also going to look for these fibs. Red Fibonacci resistance, guys. It's a red line on your large chart. And this is when the market is trending up. This is a point where the market may stop, it may bounce, it may reverse completely. And then the opposite is the blue line below when the market's trending down. This blue Fibonacci support is just a line where the market may stop, bounce, reverse completely. Yellow 1-to-1s, if the market's going up, they behave as resistance. If the market's going down, they can behave as support. And guys, these lines on a large chart are where decisions are being made. And then the cool thing is you're going to use the trigger lines to tell you whether or not they're likely to stop the market. You're going to use the trigger lines to tell you whether or not they have the potential to break. And you're going to use the trigger lines to let you know if they've actually broken. So we're going to go to that. Once I have momentum, I'm going to go to the large chart. I'm going to stay on the large chart, guys. And the beginning of the recipe. So this is for you, Z Robot. If price reaches resistance, and this resistance could be a divergence high line, that magenta line. Guys, it could be yellow 1-to-1. It could be red Fibonacci resistance. But when price reaches the area, your dynamic Renko bars come up and hit that area, hit that line. All you have to do is ask yourself, where are my trigger lines? If your trigger lines are below resistance, no long trades into that area. It might stop the market. It might create an untradeable bounce, guys. And the reality is, and the truth of it all is that you don't know. You simply don't know what's going to happen. But what you can be 100% gospel truth sure of is that if price reaches the area and the trigger lines remain below, then you've lost your advantage of a clear path. Rule number 2 isn't met. And if the sellers are in control and the market's screaming down and everything is flying and price reaches Fibonacci support, price reaches yellow 1-to-1s, price reaches one of those divergence lows, All you have to do is ask yourself, where are my triggers? And if your triggers remain above support, no more short trades, you don't have a clear path. And guys, this is the most basic form of termination conditions. So one of the things that I want you to avoid the temptation of doing, don't rank these lines out. Where's my lines picture? Hold on one second. Don't rank them. If price reaches a line, where are my triggers? Is everybody cool with that? I put this picture into the room for you. Z-Robot, does that help? It doesn't matter which line it is, but once you know which lines can create a problem, guys, all you got to do is let price reach it. And that is when we're not going long, when we're not going short. And check this out. Price reaches resistance, even with odds favorable momentum. And it stops the market almost to the tick. And it goes straight to Fibonacci support. And every trigger remains above support. And look at the bounce directly to that divergence high, directly to resistance, and then it pushes the market down. And guys, I want you to see something absolutely amazing. I think it's amazing. I hope you find it amazing. Maybe you won't. This picture is the S&P, August 12th, 2024. And then if I go to the user guide and I go to our termination conditions section, guys, I want you to see something. This is crude oil, 2021. Price reaches resistance, pushes all the way back to support, comes all the way to resistance and a divergence high, and reverses. Does everybody see this picture? This is at least 3 years ago. This is today. Everything that we do is patterns, ladies and gentlemen. And this always astounds me when I see this, and I see this a lot. Do you guys see the similarities? This is one of the reasons that pictures are so important. Because you're burning this look into your head. And guys, that's the same look. All the way down to that tiny little tail that pulls back to those small triggers off that termination. Guys, these are 3 years apart in different markets. So what you're learning right now is just how to identify some patterns that give you an advantage. And I love it when that happens. Well, when is the area broken? If I can't trade into an area, I have to be patient. I have to wait. When my small triggers and my large triggers get south of support, guys, support behaves as resistance. The area is broken. The path is clear. When the small triggers and the large triggers, both lines of both, get above resistance, resistance behaves as support. The path is clear. So guys, every time price reaches resistance, every time it hits that line, in the moment, you're going to be at a termination condition. It may last for a second. It may last for 3 hours. You don't know. But once the smalls and large get to the other side, it's go time, guys. The path is clear. And then once again, just going right back to the large chart. Let's find it. The market's been consolidating. When the smalls and the large get below the line, the path is clear. We're looking for the next line. And that path remains clear until you hit the next line. And then you go through the process again. Where are my triggers? So, guys, is everybody good with that? I'm trying to keep it super basic, right? First, we look for momentum. And then once we have momentum, let's make sure that the path is clear. Let's get all of those advantages in place. And once you can identify, guys, momentum and a clear path, you're going to start pinpointing those entries. You're going to start finding opportunities for the highest probability trend trade. And it's also going to open the door for your second trade, the next trade, the not quite as high probability trade, because this one relies on momentum 100%. You have to know that lesson. You have to understand that it takes both triggers getting below support for the path to be clear, or both triggers above resistance. And guys, this look is when half of your triggers make it through with odds favorable momentum and half don't. 50-50. 50% are through, 50% are not. This look right here lets me know that that fib has the potential to break. And guys, potential is the key word here, because potential means that it's not broken. And if it's not broken, rule number 2 isn't met. And if rule number 2 isn't met, then it'll never be a high probability trend trade with this look. But I'm going to hand you a plan that gives you the highest chance of success to not only be able to capitalize on odds favorable and a clear path, but also odds favorable and the potential to break. And what you're going to find is that this becomes one of the most traded looks that you have, but you're also going to find that potential to break fails probably more often than it wins when it sets up one of those bounces. And I'm going to give you a plan that gives you everything that you need to be able to trade that potential successfully, or to know that you just need to sit on your hands and wait a minute. So guys, this is rule number 2. These are lines on a large chart. I want to say that one more time. Lines on a large chart may stop the market. Lines on a large chart may create a bounce. Lines on a large chart let us know where the large crowd is making decisions. You've got to learn to respect lines on a large chart, guys. The easiest way to do that is just scroll back and see how many times those lines stop the market. Remember, 90% of your day is waiting for advantages, and sometimes you may sit for a couple hours before those advantages come in. And it's not about taking the most trades, it's about taking the best trades. So, guys, rule number 2 is met on the large chart. But when I have odds favorable momentum, and when my path is clear, guys, I'm going to look for an entry. And I'm going to do that on the smaller, faster chart. So I can shut down my large chart. And I go to the small chart, and I'm ready for an entry. And I notice that there's 3 divergences in the same price range. Guys, this is the only termination condition on a small chart. We're not done with termination conditions yet. This is the only time that I'll look at a small chart and say to myself, the path isn't clear. 3 divergences, 3 losses of momentum in the same price range may terminate the trend. There's that magic word may again. Might. Good. Isn't destined to. Doesn't guarantee a reversal. But it might. My advantage is gone. And guys, this look, 3 at a low, 3 at a high, becomes even more powerful with those anything can happen triggers. That little lesson from rule number 1. And it becomes more powerful still if it creates a little head and shoulders pattern. When the 3rd divergence is higher than the previous from a low, or lower than the previous from a high. So guys, if everything is perfect on the large chart and you go to the small chart and see this look, then rule number 2 isn't met. You don't have a clear path. But if it looks good, if the momentum is there, if the path is there, let's figure out how to get into the market together, guys. Let's figure out where the market is most likely to continue. Let's find the point where the small crowd is most likely to fail. And remember, all we're doing is we're letting the large crowd lead the way. The large crowd says momentum. The large crowd says that there's nothing in the way. And then the small crowd's going to show up. And they're going to say, hey, guess what, large crowd? We're fighting. So guys, we're going to pinpoint exactly where they're most likely to fail on the smaller, faster chart. And this little shove that they create is called a pullback or a retracement. And rule number 3, I don't worry about anything. Ever, Ollie. I don't have to worry. Lower than what? Show me a picture of what you're talking about. So, Ollie, one of the things that makes it easier for me, I've got such an artsy-fartsy brain that in my head right now, I've created 100 different pictures that would fit the description. And what you may be talking about is management. But for the high probability trend trade, Ollie, this is the only termination condition. And all we're talking about right now is entries, right? The only thing that we're talking about right now is entries. It's getting into the market at the absolute best of the best spot. Let me see real quick. Ollie, let me drop this in the room for you. And I think that's going to answer your question, but it's a management thing. It's not an entry thing. And right now we're only talking about management, But check out that little Word doc that I just dropped in the room. I think it's going to answer your question perfectly because it is a management tool. So guys, we have momentum. The path is clear. Life is good. Let's look for an entry. And of course, Ollie, let me know if you have any questions about that. Our entry rules are so precise that you guys are going to use a limit order. You guys are literally going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback. That little shove that the small crowd creates, you're going to buy or sell that pullback. And you're going to do it at areas. I did understand? Awesome. That happens every now and then. You're going to use a limit order to buy or sell a pullback at an area. So guys, lines on the large chart could be problematic. Lines on the small chart, guys, this is a must-have. This gives the market something to bounce off of to continue with the trend. But here's the deal, is we want those areas inside of triggers. Ideally inside of what we call favorable large triggers. So when the rules are met on the large chart, guys, when everything says down, when everything is screaming, when the rules are met, we're going to refine 1 bar on the large chart to about 20 or 30 bars on the small chart. And I changed up my PowerPoint a little bit this morning, guys. Large triggers are moving averages. Large triggers are moving averages, and price typically returns to the moving average on the large chart, on the small chart. And you'll notice that I put a white circle around the large chart, large triggers. And I put a square around the small chart, large triggers, guys. Rule number 3 says that we're going to buy or sell a pullback at an area inside of triggers. When you allow the large chart, large triggers, and the small chart, large triggers to overlap on your entry chart. And you'll see the two of them. Large chart is the synthetic triggers, the step triggers. Small chart are the smooth triggers. When they overlap, one on top of the other, 2 snakes riding piggyback, guys, this is used for entries. This means that my correction point, where price is likely to return, has become one area. It has become only one spot on this small chart, which means that there is the smallest, most compact space to have areas inside of, fibs, midbands, or yellow 1-to-1s. We call this look favorable large triggers, guys, and favorable large triggers will reduce your risk. Favorable large triggers will increase your profit potential. And guys, when you have those favorable large triggers and you have the areas inside, you will pinpoint where the market is most likely to continue. And this is going to become your entry for the highest probability trend trade. So when we define that window, that area where it's most likely to continue, the first thing that has to happen is that the large chart rules are met. And I can't stress this enough, guys. Insisting on odds favorable momentum, insisting on a clear path, those two concepts seem to produce the most winners in this room that you guys print. Those two concepts are what tend to be carrying you guys where you need to be. So let the large chart lead the way. Let it be beautiful in the beginning. You'll get some reps in. And then once you get those advantages, guys, we have to wait for the small crowd to fight. That's going to show you a reversal bar on the small chart. And this reversal bar signals the beginning of the fight. It's the beginning of the pullback, that retracement. The reversal bar is not your entry, guys. It's just a little loss where the small crowd begins to fight. When you get the reversal bar, identify your trigger lines. They should be one on top of the other. They should be strong in the direction of the trend. And this is that favorable large trigger. The red box represents the point on your chart where I need to find areas. Fibs, midbands, yellow 1-to-1s. And it's the areas inside of triggers that are going to identify your bounce point. This is the best of the best. So sometimes there's multiple. You're going to create a window of opportunity, the window where the market is most likely to continue. And guys, for a long trade, it's going to extend from the highest point of support, this mid band, to the lowest point of support, these yellow 1-to-1s. And this blue line outside of the trigger lines, guys, it's not in the window of opportunity. It's not where we expect the market to bounce. It is beyond the correction point of the triggers. It's beyond the areas inside of triggers. You'll actually find yourself putting your first protective stop beyond that window. But if the market comes down and hits your limit order right at the top of that window, guys, because remember, large charts got odds favorable. Large charts got a clear path. We're going to get in right here at the very top. If you see price push beyond that mid band but stay above those 1-to-1s, you're cool. You're still in the window. It still may bounce. And this is the best of the best entry, guys. This is the highest probability entry. This is where you're going to have the least amount of risk because you wait for the pullback. This is where you're going to have the highest amount of profit potential because you are as far away from those targets as possible when you wait for the pullback. And the same is true going short, guys. I got so many calls last week. Mark, are you guys okay? The market's going down. The market's crashing. The volatility's crazy. And I had the huge smile on my face when I told them, no, I make money on shorts too. I can sell futures. So when everything says down, when the market is dropping, when the momentum is high, when there's nothing in the way, once again, I wait for the small crowd to start their fight. I wait for that reversal bar. And at the time of the reversal bar, I'm going to identify my favorable large triggers, and then I'm going to look inside of those triggers for an area. Fibs, midbands, yellow 1-to-1s. And in this case, we have the magical instance where there is one line inside of favorable large triggers. And that one line represents the point where the market is most likely to continue. And guys, I'm going to activate a limit order just below it. And I'm going to hope that the small crowd gets me. And if they do, I've got my highest probability trend trade entry. I've got the best of the best. I pinpointed exactly where the market was most likely to continue. And I literally just waited for the market to come up to my entry, guys. And this is the part that you guys are going to need to study a little bit. This is the part that you're going to have to develop a little faith in. But the cool thing is, if you give me 20 days just identifying where the market is most likely to continue, 20 days not worrying about getting rich, 20 days not caring whether it wins or loses, but simply finding the area where the market is most likely to continue, then you're going to find yourself as a chart reader. You're going to find yourself with a plan that typically wins 70 to 80% of the time. You're going to find yourself using an entry that creates confidence. And by identifying where the market is most likely to continue, you're going to know exactly where the market shouldn't go if that trade is one of the 20 to 30% that don't typically work. And this is where your initial stop goes, guys, outside of the window of opportunity, beyond those trigger lines, 4 to 5 ticks typically. And if the small crowd has it in them to get to your stop, you're going to exit the trade. It's going to take you out of the trade. You will take a loser, guys. Every 10 high probability trend trades you take, you're probably going to lose 2 or 3 of them. So if you're brand new to trading, I want you to be okay with taking losers. I want you to be okay with the idea that you're not going to win every trade and that winning isn't a failure, guys, not at all. Especially if you won with the advantages, with the pattern that has been proven to win more than it loses. And this is what I try to instill in you guys in the beginning, is don't worry about the results yet. Focus on your entries, guys. Your entries, great entries, create manageable trades. So you've got to study those great entries, and here's exactly how to do it. When your large chart, and this is historically, you're not in a trade. There's no anxiety, no pressure of winning, no fear of losing. You're just going to scroll back on a large chart. And every time you see that great momentum look and your path is clear, guys, circle the tail. Just circle the tail on the large chart. And if it lines up with an area inside of favorable large triggers on the small chart, well, then you've just found a high probability trend trade. Look at what happened off of that termination condition. Holy smokes. You guys knew where that was. Isn't that awesome? I wonder if there's any opportunities in there. I wonder if anybody in this room found themselves short off of that top. The first pullback was a mid-band inside of triggers, and then it got a little sketchy, and then it was a mid-band inside of triggers, and then it was a little bit on the wrong side of triggers. But the large chart never blinked, guys, and now we're at support with weak triggers. Let's see if it creates a bounce. It may not. I don't know. What I do know is that my advantage is gone. And guys, that's what we do. Learn to study. Go back and circle tails. Annotate charts. Drop them in the room. Ask a million questions. And the whole basis of everything we do, guys, is simplicity. Make sure that you understand a couple looks. Make sure that you understand what it looks like to have strong triggers, and then be able to identify weak triggers as well, because that's when the advantage is gone. Make sure you can find a clear path, and make sure you understand what it means to have a termination condition. Find those windows of opportunity. Find that best of the best entry. And this Chart Reading 101 is designed to put you in a position to become a chart reader. You have to go back and take pictures, guys. Take pictures, 25 each, strong, weak, clear, termination. And if you do that, by the end of this exercise, you're going to be pretty solid at reading your indicators, understanding these advantages. To really make it set in, guys, is don't just take the pictures. Talk about the whys. Why are the triggers strong? Describe it. Spend some time typing. What is the advantage? And do the same thing for termination conditions, like when the advantage is gone. Talk about how that can hurt your trading. And if you do this, you're just going to piece these looks together to create a trade. So I'm going to give you that. And then I'm also going to give you a high probability trend trade checklist. And you know what? I'm going to do this real quick. We're going to rearrange right here on the fly. This high probability trend trade checklist, guys, it is designed to get you into the market. I screwed that all up. To let you see exactly what it looks like to have your rules met. Sorry about that. to show you what it means to have a strong top or bottom, that termination condition that reverses the market. To identify momentum, and then to understand when that momentum goes away. This is going to help you take those pictures. It doesn't get any more basic than this, guys. No triggers through. It's not broken, not a clear path. Commit to that look for a little bit. We just watched it reverse the market completely and drop it like a ton of bricks. Potential to break, actually broken. And then defining entry areas, guys. Pretty cool, right? And the thing is taking pictures, annotating charts. Taking pictures, annotating charts. Committing these to memory. And then at the top of this page, I need to put it on the bottom of the page, is a trend trade checklist, guys. This is nothing more than the entry rules. Allowing you to police yourself, allowing you to say, is this happening? Is my advantage present, right? And understanding that it's the rules that get you into the trade, guys. The chart read lets you understand that the rules are met. I've never had anybody mark yes to all four of these truthfully and do worse than 70%. It's just never happened. You probably won't be the first. And then finally, the KISS plan. In the KISS plan, guys, this is a stepping stone. Everything that we've talked about in the first hour is the entry for the highest probability trend trade. Everything that we've talked about for 45 minutes doesn't have anything to do with making money. It doesn't have anything to do with long-term investment portfolios. All it is finding an entry. That's it. Finding the best of the best, highest probability entry. And guys, this is a stepping stone. This is your first trade, not your last trade. It's designed to optimize your chances of success as a new user. It's designed to turn you into a chart reader. It's designed to create confidence through the memory of success, guys. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, guys. That is an AI-generated fancy way of saying that once you can read your indicators, once you can identify these advantages, guys, you're going to see a million opportunities out there. You're going to see extra entries. You're going to see different management. You're going to see all these different types of trades that are available to you, but it's all going to be based on your ability to read the charts. So let's focus on the chart reading first, and most importantly, let's focus on entries first, because great entries create manageable trades, guys. So your simple plan for consistency: don't fight the large chart. That is probably the best rule I could ever get you. Don't trade into those termination conditions. Guys, look what happened right off of that fib. I can't make this up. And look where it came from. So rule number one, don't fight the termination conditions on the large chart. Allow them to be. And don't fight the momentum. Awesome. Have a good one, PFI. Daily targets hit. Congratulations. When everything is screaming down, guys, don't try to go long, right? What a horrible way to trade. You have too many advantages. You know exactly where it's likely to stop. You know when it's pushing the other direction. So keep your focus on simplicity at first. Keep your focus on the best of the best. Keep your focus on getting into the market where the market is most likely to continue. Where is my KISS plan? There you go. And don't fight the large chart. I don't tell you guys how to trade, but I can tell you what'll rob you of success. Fighting the large chart. Define your entry, guys. Get into the market where the market is most likely to continue. Great entries create manageable trades. In the beginning, management is going to scare the bejesus out of you. Management is going to terrify you because you're going to feel like you have something to lose. The more you study entries, the more you'll trust them. The more you take these trades in simulator, the positivity, the trust comes in, guys. The fear goes away. And you're going to have to manage all of these great entries. So in the beginning, if you allow your management plan to be as mechanical as your entry, if you try to eliminate the fear and the anxiety and the worry by keeping it very if-then, it's a great way to approach it. And then you will craft a plan tailored to your personal goals based on your ability reading the indicators. Guys, once you can get into the market and once you've gone through the mechanical process, you're going to begin to see reasons to manage a little bit differently. But until you can do that, get in where the market is most likely to continue, guys. Get in at the point inside of favorable large triggers and put your stop where the market shouldn't go. And then just sit on your hands and wait. It's either going to stop you out, and that happens. I want you to learn to be okay with it as long as it's the right trade. Or with that boatload of advantages, guys, you're going to get a reversal bar in the direction of your trade. If you get a reversal bar in the direction of your trade, your new stop, your first stop movement is going to be 2 ticks above that reversal bar. And then once again, you're back in the waiting stage. It's either going to hit your stop or it's not. And if it doesn't hit your stop and it continues down with momentum and a clear path and the bounce off the area inside of favorable large triggers, your first target in the KISS plan is only $100 from your entry, guys. And that's difficult for a lot of people to accept. Well, Mark, it's only $100, right? Mark, I can't make any money on $100 a day. It's insignificant. It's like it doesn't even exist. And what you're going to find is that $100 a day is a $25,000 year, guys. $100 a day. $50 a contract is a $25,000 year. And $25,000 sounds nice rolling off the tongue. So what you're going to do is you're going to commit to that $100. You're going to get paid. You're going to feel good about it. Your Ninja Trader is going to tell you, hey, it's in the bank. And then you're going to move your stop to break even. You're going to say, I have absolutely no risk. I still have every advantage. I've already been paid. Let's see if it can hit the second target, guys. And you're either going to get stopped out break even, or it's going to go to the second target. And if it goes to the second target, it's only $200 from your entry. That's it. This entire trade, that tiny little flash in a matter of moments, is a $300 trade. It's a $300 trade that is based entirely on having momentum, a clear path, and nailing the entry. And that $300, if that's the best you do every day, is a $75,000 year. And I'm going to tell you right now, guys, if you focus on these rules, if you begin to recognize these advantages, and most importantly, if you learn to speak to yourself in terms of these advantages, $300 a day is going to seem like a waste of time. You're going to find that it's easier to make $500, $700, $800 a day by following the rules, by sticking to the plan, by having a reason to do everything that you do. And the easiest way to do that is to commit 100% in the beginning. Either my rules are met or they're not. And there's only one option that gets you into the market. And guys, that is my first hour. And it's the first hour every day. Every day we do the exact same thing. Every day we focus on these advantages. Every day the first hour is designed to help you become a chart reader. And one of the things I'm going to do, there's always all of the gifts. So I'm going to give you the chart reading 101. I'm going to give you that daily goals that talks about how you don't have to make $1 million to make $1 million. The exit conditions, high probability trend trade checklist, the KISS plan, and I'm even giving you a PDF of the pictures that I use to teach the class, guys. All of that is in the room right now. I'm also giving you, for the second time, my spreadsheet to make sure that you have all those pictures that I've done all the work on already. And guys, all you've got to do at this point, you have everything that you need. You have the rules, you have the looks, you have the management, you have the greatest software in the world. Now you just have to learn how to use it. And that's where the next 2 hours come in. The first hour is very lecture-y. I get that. It dries my mouth out every day. The second hour, the third hour, we're going to go back and we're going to talk about your pictures. We're going to talk about your trades. To get the absolute most out of this classroom, guys, to get the absolute most out of the feedback, you have to tell me what your chart read is. You have to tell me what you saw. And what I want you to get in the habit of doing, starting right now, day one, is every time you take a picture, I want you everything you need to make sure that you're identifying it consistently, the same with the path. And not only does this reinforce the rules for you, but what it does is it gives me the ability to check your chart read, to make sure that you're reading your indicators correctly. Because if you're not, well, then all we do is we go back and we turn it into a lesson rule. Get away from your desk every now and then, guys. Stand up, walk away, especially if your rules haven't been met. So that's what I'm going to do right now. I'm going to stand up and I'm going to walk away. When I come back, we're going to look at your pictures. We're going to talk about those 3 advantages on them. We'll watch the large chart, right? Smalls are above the large. The large are wide. They're angled in the direction of the trend. The space between the two lets me know that I have odds favorable momentum. With a look like this, I'm going to turn my attention and I'm going to say, if I get a pullback, do I have any areas inside of triggers? And oddly enough, guys, I don't. My large triggers are here, but my synthetic triggers are all the way down here, which means that I don't have favorable large triggers. We'll see if that changes as things progress. But all I'm doing is I'm talking through 3 rules every time I look at my chart. When I'm trying to decide if it's time for a trade, this is exactly what I'm doing. I'm walking through it every time. I'll see you guys in 5 minutes. If you have trades, post them. If you have questions, post them. Back in 5. Red Rob, flat means that you're not in a position. Flat means that you have absolutely no stake in the game in the moment. So if I'm in a trade and I exit the trade, now I'm flat. It just means that you're not in a trade. Guys, does anyone else find it surprising that all of that momentum carried this market up, that all that momentum kept it going? Kind of crazy, right? It's fun when that happens. Even on crude oil, same thing. Termination, everything's going up. And it's nuts. It just keeps happening. This is why we go 4 to 5 ticks beyond the correction point. It just keeps happening, guys. Every day, this is a pattern that repeats itself. Every day, this is an opportunity for you guys to make money. This is an opportunity for you guys to have these advantages to be able to get into the market. So I'm going to start going through pictures, and we're going to talk about momentum. We're going to talk about clear path. We're going to look at some entries, and guys, I'm going to tell you right now, you're going to hear me say momentum for the win as many times as I can today. And it starts with Paul. Nice to see you, Paul. He's not in here, though. He dropped this in yesterday. That's okay, though. Look at that. Termination reverses the market. It creates odds favorable momentum, and the path is clear. And Paul says, you know what? With these advantages, I'm going to take a pullback right at the mid-band, right inside of favorable large triggers, and I'm going to make some money. And sure enough, he did. He made all the money on that one. Notice that 2 divergences didn't keep him from finding his great entry, guys. 2 divergences is not 3 divergences. There were no termination conditions. The momentum was the best. And guys, this is outstanding. This is one of those pictures that you should steal, copy it, grab it. Go to your favorite trades looks. I'm going to go to the client trades look, but I'm dropping this picture in here because this is something that I want you guys to study. I want you guys to look at this and go, man, with odds favorable momentum and a clear path, it's a win. And it happens over and over and over. And then Cheetah says, check it out, Mark. Odds favorable, clear path, strong bottom. He gets in, and it's a little unorthodox, right? It's kind of at a mid-band in between the two. And he says, I'll put my stop below the areas. And he's able to make money. Once again, odds favorable momentum for the win. Clear path for the win. And I don't know what's going on with the short trade, Cheetah. I have no idea what's going on here from 71.8, which is like right there. Can't even see it on this chart. So you got something else going on there. I'm not sure what it is. But the first one I like. The short seems a little odd. But it is going against you with everything pointing up. So great first trade. Beautiful recognition. Once again, guys, strong triggers, clear path. Even if it's not the perfect high probability trend trade entry, you're going to find a way to find your trade. You're going to find a way to capitalize on that momentum and the path. And that is, I'm telling you, once you learn those two, guys, commit to those two, you'll be absolutely floored at the opportunities that are available to you. And then Pete, odds favorable momentum, potential to break, Pete. Not quite a clear path. You get in at the high point. It stays inside of the correction point, and you make money all the way up, out at 1-to-1s. What a beautiful trade. Momentum, guys. Potential to break. Just, I mean, rock star. And then it just comes back and gives another one in case you didn't give this one. Absolutely outstanding, Pete. Not a lot of pictures this morning. And then PFI, I know you're on the phone. You've already left. Let's see what we have. Termination. This is the one that you have when you get divergence off the high. I'm trying to see where your entry is. There's the exit. You've got that deal where you'll just hop in and take that little snippet going to the next area. And PFI, look guys, termination, reversal, momentum. PFI says, I can catch a little bit of money every time with this one. He crafted a plan tailored to his personal goals based on his ability to read the indicators. PFI, I admire the consistency. This is exactly what you said you did last week, and it's exactly what you're doing this week. Nicely done. I hope you hear that on the phone. And then Pete, let's see what happened. You said big bounce off of the BFF. Everything says up. And then Pete, it's not a clear path, brother. Can we address that real quick, just for a lesson in the room? For everybody else that's seeing this one. Oh, okay, that was the current yes. I got you. Just for everybody in the room that isn't Pete, and for Pete as well. Guys, if the small triggers are above the fib, but the large triggers haven't broke, it's never a clear path. It can't be a clear path. What this is this is the 50-50 low. That 77.89 fib has the potential to break, but until the large get above, it's not a clear path. Well, no, really, Pete? Once it cleared the fib, it was a clear path? Absolutely. And once I'm done eating, I'm full. Where did you enter? Let's see. Am I reading it wrong? You entered at 89. It was not a clear path. It wasn't a clear path, Pete. Price had already gone up to 78.07. You finally cleared the fib after price bounced here. You entered on a 50-50. That's okay. You tried to take the momentum trade on the 50-50. Didn't work. Turned into a trend trade. No worries. You do it beautifully. And then you get stopped out at your entry for the next long, right? Got some money. The old don't put your stop where the entry is trick, right? But it wasn't. You were in before the large triggers broke, and that's okay. And then this entry, that's a good one. Yeah, that was a profit stop out. Oh, okay. Well, that's what I'm saying is you put your stop. Watch this. This is a good lesson too, guys, and this is hard to catch in the moment. In the heat of battle, odds favorable, everything up, go long, go long, go long, go long, right? Large chart leads the way. Does it make sense? Absolutely. Does it make sense to put your stop at an area of support inside of favorable large triggers when the large chart looks like this? And Pete, your plan is your plan, and I'm not encouraging you to change your plan. But logically, should I put a stop at an area inside of favorable large triggers when the large chart says I should be looking for a trend trade from an area inside of favorable large triggers? Does that make sense, everybody? Your ability to pinpoint where the market is most likely to continue might dissuade you from getting stopped out right at that exact area. But when you have all of this going on, I'm not going to lie to you, it's hard to think that through. And then usually, right about the time you're getting back in at the exact same price, you're like, son of a gun, I could have just stayed in this trade and maybe added on. And that's one of those things that comes with experience, and I don't know when it gets to the point to where you never do it, because I still catch myself doing it sometimes, not thinking it through in the moment. So certainly not throwing stones, but when I see that, that's one of those instances, and I want to say that in the client trade section, there might even be something that says don't put a stop where the market is likely to continue. For sure. No, Pete, I agree 100%, right? Don't give it back. But for me, and this is just me, right? If I know, so what's the exit condition that got you out? Is it just an arbitrary stop? This is where I begin to think on management terms. If a pivot stop out's enough to get me out, well, then I'm out on the third bar, not here, right? And this is where, if I know that this is trouble, I'll even let a reversal bar take me out and re-enter. So I start thinking in terms of profit preservation as well, the same way you do, Pete. But I would be quicker to take profits knowing that I'm a freaking rock star with my chart reads if I were you. And you're going to find the next entry if it sets up. I love the trades though. 6 to 8 ticks beneath price. And I like that, but it's a very arbitrary stop, right? And you have to believe, yeah. And you may not want to change it because, dude, you're doing great, right? If it's not broke, don't fix it. But I see it as an opportunity to create a lesson, guys. So if you, I mean, you know what you're doing. Anyone that adds on to positions like this has the utmost faith. I can't talk this morning in this look here, right? You're like, I'm just going to keep adding on. No worries. And it's kind of the same look. It's the exact same look where you entered. So I like it. I'm not knocking you at all. It's just one of those patterns that I see a lot. And I'm guilty of it myself. So I don't mind pointing it out. Because I think eventually we get to a point to where it doesn't happen. No management. Only a good pullback and quick target hit. All right, Z-Robot. Do you notice anything weird about your large chart? That there's no price bars on it? Just, I want to make sure I'm not the only one seeing this. We need to reload a little bit, Z-Robot. But what you did is it looks like you took momentum and nothing in the way, and you just jumped in and made a couple bucks. Nothing wrong with that, right? Momentum and clear path for the win. But not having price bars on here is a little weird to me. And do the white lines have any significance? Are you still in here? He may not be in here anymore. Guys, if you ever look at your large chart and you're missing price bars, you may want to reload historical data, try to make sure that you can get it back. Missing a lot of information. But the one thing that I can tell, just based on the lines, is that it is absolutely momentum and clear path. And he just takes a quick little snippet, just that whole, hey, I'm getting my feet wet. Good stuff. Red Rob. Price reach triggers, holding, so am I. I don't know what that means. Maybe the next picture helps. Which carries more weight? Triggers not through or pullback inside favorable large triggers in an area? Great question. Rob, are you with me in here? Cool. Let me give you the easiest answer for that one. I like this question a lot. Which is more important, Mark? Is it the clear path or is it the entry, right? That's essentially what you're asking. There's a huge reason why these are numbered 1, 2, 3. There's a very impactful reason that momentum leads the way. Because momentum is probably the most important thing. Momentum lets me know that the odds are favorable for the market to continue in the trend. What a huge advantage. And then once I have momentum, before I even look to an entry chart, I make sure that I have a clear path. So to answer your question, Rob, importance goes in this order. If I don't have these two, I couldn't care less about an entry inside of favorable large triggers, because it's not an entry inside of favorable large triggers, because I only have entries when the rules are met. So you've got full-blown termination. Don't let the small chart talk you into a trade when the large chart says no. Does that make sense? And again, I'm raising my hand because, man, I've done it. But it's not even that sexy. Your large triggers are way up here. Your synthetics are way down here. There's this big, but notice that it blows right through. Rule number two keeps you out of the loser. And I'm telling you, it's the siren song, Rob. I have taken small chart entries without large chart rules more times than I care to admit, which is why one of the things you can do is if the large chart rules aren't met, minimize it. But check this out. Odds favorable. Haven't reached the one-to-ones yet. There's my lowest point of resistance inside of triggers. Isn't that crazy how quickly that can happen? If all you do is focus on advantages. And then, Rob, I know that I'm going to try and dissect your picture here. Price reached resistance, triggers below, so you're in a waiting. So terminations, you're like, I'm just going to hold on for a second, let it break. I dig it. Guys, I love these pictures. When your rules aren't met and you just remind yourself, hey, wait a minute, I have rules to keep me safe. Nice picture, Rob. That one took me a second. I don't know why. That one's on me. Cindy, termination, odds favorable, not a clear path. And you take a little snap back right at the fib. Not odds favorable. And make some money. Odds favorable is the first rule, right? And Cindy, you had odds favorable momentum here for sure, without a doubt. Definitely didn't have a clear path. Do you see it? Right into fibs. Okay. But everything says down and you go short. And look at that. So you took a chance on not having rule number 2. And went with the direction, went with the momentum, went with everything saying down, and you were able to capitalize. And guys, this goes back to this cool thing I think everybody should build. Take this picture right here. I need to give it to you guys. And print it out. And cut out 3 pieces of paper. So Cindy, you had odds favorable momentum, right? You didn't have a clear path, which means that you probably spoke to yourself out loud and said, okay, wait a minute. If I don't have a clear path, and Rob, this kind of goes back to yours, if I don't have a clear path, but I do have momentum, and I do have an entry area, maybe I'll take a medium probability shot at it if I can do it low risk. And it doesn't change the fact that the path isn't clear, but as you grow with the software a little bit, you might change your approach. Me too. I trade into areas, Rob. I trust areas wholeheartedly. And that's just me. And then Cindy, can I do one other thing? And I want you to remember how much I like you when I do this. You were in at 28, out at 18, so $200 there. And then another, what is that? $15,300, so $500 trade, right? That's amazing. Why are you hiding $465 worth of losses from me? Because those are the ones that are going to get you where you want to be. This is the one that makes your ego feel good. Whatever got you to that negative number, despite the $500, that's where, that was yesterday? Yesterday was Sunday. It was a mistake? Right on. Cool. Guys, I notice stuff like that, and it's not to call you out on it. It's just the losers are where the magic happens. The losers are where we get better. You traded on the night, right on. Cool. Pulled right back to areas. They're kind of sandwiched in between the two here, though, right? They're not inside of triggers. Does everyone see that? The areas aren't inside of triggers. I do have odds favorable. My path is clear. If I chose to take this trade not inside of favorable large triggers, my stop still has to go up here. About 15 ticks. The more these triggers begin to split, we find ourselves with just a little bit more risk, a little bit less accuracy. And then when you start incorporating into it, where's it coming from? Well, it's coming from a bad top. It's not coming from a termination that reversed the market. The mid-band becomes a little more likely to hold, which means that I'm a little more insistent on this being perfect before I take the trade. And with these split triggers, have you guys ever heard me talk about just wait for a confirmation bar? Wait for the market to give you a reversal bar in the direction of the trend. And if you never get it, you never end up taking the trade. When it's not perfect, it's okay to insist on confirmation. It'll cost you a couple ticks, but it'll save you from a lot of losers if you never get that reversal bar in the direction of the trade. And guys, I hate to say it. Well, actually, I don't know. I guess it's a pretty mellow day, huh? But that's all the pictures that you guys have given me today. That's it. So now it's up to you guys. What are we going to talk about? What have you been working on? Hey guys, I've got people in this room that have been with me for a long time, and I know you're not coming back just because you think I'm neato. What can we work on? What do you want to talk about? This is your classroom, ladies and gentlemen. Help me out here. Or my brother's going to start sending me messages saying, dude, just shut up and make him ask questions. Haven't seen one yet? Nothing fits your rules, Ollie? Can I go over the spot with possible reversal? Hey, Morgan. Every one of these lines, Cheetah, on a large chart, every one of these lines is a possible reversal point. To be honest with you, though, every penny on the chart, we just don't know. But at least here we can identify where the people that are in charge go over gold for today. Let me open it up. Be happy. Be happy to. I don't have an order flow chart. If you want to talk about market flow, you have to post the pictures. I don't even have market flow built on anything that I do. So you're welcome to, but let's pull up gold. I'll look at Steve's while we do. Steve says everything is up, coming from a bottom. Not quite piggybacking yet. Steve says, you know what? With this look and the potential to break, I can take a momentum style right from the fib, trading from the area, not trading into the area, and just making money. I like it, Steve. Guys, this is beautiful. Trading from areas, not trading into areas. That made all the difference in the world on this trade, Steve. And then just quick profits. Why not? Let's just get paid. Everything says up. Everything's moving. Let me trade from an area inside of triggers and let me get paid. And it wasn't a clear path. So once again, we're at that not quite a clear path. Rule number 2 is gone, but a little heads up trading. Very nice. I like this one, Steve. Well done. All right, Cheetah. Everything says up, strength, pulls back right to the mid band, right to 1-to-1s, continues up with all that momentum. There's the first one. That's pretty good. So possible reversal points. And I'm assuming that you may be talking about this right here, initially. Is this one of the spots you had a question about? Absolutely, Tom. I'd love to. Give me just 1 second and we'll get back to that one. So there's 3 looks, and Cheetah asked about reversal points. You can't until it turns, Cheetah. Until it turns, you don't know. But let me show you how understanding the very basic concepts can give you a heads up. So there's 3 potential, and Tom, this is going to lead into your question. And welcome, by the way. There's 3 possibilities. There's a termination condition, right? And this is when price reaches an area. In this case, support. Drunk fingers. And the triggers remain above. So this doesn't fit that description because the small triggers broke through. So this isn't technically a termination condition. Cheetah, what we're looking at here is what we call a 50-50. And then Tom, this is the progression. Every termination that's going to break turns into a 50-50 trade. And what that means is that the small triggers break through the line, the area, in this case support, and the large have not. And what this means is potential to break. So if you go back to the very basic concepts of whether it's a termination or has the potential to break, Cheetah, do you see how it has the potential but it's not broken? That's the most important thing, is knowing the difference. So there's a couple heads ups. First, divergence, if I go back to the KISS plan, and Tom, I promise you, we're going to do a full lesson. If I go back to the KISS plan, Cheetah, this is where simplicity pays dividends. What the KISS plan means, let me make it a little smaller so we can see it all. This is the best of the best way to take one of those 50-50 looks. The best of the best way. So it relies on the momentum. That's a key part to areas breaking. But divergence is one of the biggest killers, Cheetah. So if I have a 50-50 look, if my smalls get through and my large don't, and I see divergence print, I know that this area has a better chance of holding. So it doesn't confirm that it'll be the turning point, but it says, okay, the likelihood of it continuing down decreases. Does that make sense? And then a second divergence increases that likelihood that this area might have been just a little bit of overrun. But until on my small chart, I see these large triggers roll. Until I see those small triggers start to break above the large triggers, I'm assuming 100%, because look at the look here. That's the look on the large chart. Everything says down. So I'm not going to guess and hope and wish and want that this holds. What I'm going to do instead is I'm going to let the small chart, the faster chart, start to give me a little idea that that might have been a little run over. Does that make sense? So you're going to see the change over here. A couple divergences, the triggers roll, and then it's not really reversed. It's not the turning point until we see that. Until the large chart says, hey, guess what, Cheetah? It's done. But the cool thing is you may find opportunities because of these divergences, because of the trigger lines beginning to roll. All this says is don't go short. That's all it says. It doesn't say go long yet, and that's the deal. is it's that gap between don't go short and time to go long that kills traders. Is it anyone other than me? It's that little waiting point between don't go short and it's time for a long. And that's what kills traders, because there's just not the advantages that we need yet. But eventually, sure enough, you find it. It happens. It always does. And patience is the biggest piece, right? Everything says up, odds favorable. It pulled right back to a mid-band inside of triggers. Doesn't guarantee to go up, but if you were in at 89, you made $100 before the second lower divergence, maybe you're out break even based on the KISS plan, right? So the money that you didn't make when it sucked, you could have just made right here, at least 100. And it's the patience, Cheetah. The patience is the absolute hardest part, because it means that you're not making money. And you've got to think of it the other way. It means that you're not giving money away. All right, so Tom, I'm just going to do it. I'm going to see if I can find a good look here. So every fib that breaks has 3 stages. You're welcome, Cheetah. Keep asking the great questions. Every fib that breaks has 3 stages, Tom. The first stage is when price reaches the area, reaches the line. Fib, divergence high, yellow 1-to-1s. So when price reaches, and this is what it's going to look like live, do you see how all the triggers are below? So this would be a termination condition. This would be pump the brakes. Let's wait, let's see what happens. And then the market decides to continue up, and the small triggers break through, but the large triggers haven't made it yet. This is that 50-50 look that we just talked about with Cheetah. There's a good look right there, where the smalls break through, but the large haven't. So right now, we've got the potential to break. Does that make sense, everybody? And we're just following price action live right now. And then Tom, once both the small and the large triggers get above resistance, the area is considered broken. And this is what it looks like in the moment. Now resistance is broken. Now the momentum is there, and now the path is clear. Now it's time to look for that high probability trend trade. Pretty cool, right? So I've got to be patient. It has the potential, and now we're off to the races, brother. Let's look for that trade. And it doesn't look like it gave us one. Whoops. And that happens sometimes. Oh, maybe it did. But there's your pullback to triggers right there. Notice how price didn't reach an area? And notice how all the triggers are above the last area? This is where the magic happens, Tom. In between the fibs, from one key area to the next. This is the money zone. And specifically for the new user, the pullback to support right inside of favorable large triggers, that's where the money's made easiest for the new user. And guys, 2 divergences doesn't kill the trade when it's that pretty. So that goes back to, Hamid, was it you asking or was it Ollie asking? But Mark, what about the second lower divergence? If I'm in a trade, I might manage. But guys, when I have odds favorable, when I have a clear path, it takes 3 divergences to ruin my good time. There's a little indecision, but notice that it right at the mid-band. And guys, that's from 89 to 91.5. That's $250 worth of profit. Tom, does that help a little bit on the clear path? There's a level of patience that we have to have when we're doing this. And you can go back and see it. So right now, price reaches resistance. The triggers remain below. Guys, what a great place to take profits, right? And now let's just wait for the reaction. Pete was talking about, man, Mark, I'm not giving it all back. Guys, if you were in this long trade, you knew exactly where the market may stop. And yeah, Tom, I'm going to promise you, it takes a little bit. Make sure you're cool with momentum first. That's the biggest one. And then as long as price doesn't reach a line, we'll put it all together. So Cheetah, if we go back and look at gold today, maybe there was an opportunity here. Maybe with the clear path, there was an opportunity here, not with momentum, but rather just the clear path. And then they were a little dicey through here. They've been moving gold today, haven't they? Look at how rule number 2 keeps you patient. For almost 5 hours, rule number 2 keeps you out of the market. That potential to break didn't, right? Isn't that wild? How rule number 2 can keep the powder dry. How rule number 2, it sucks, and it's like the biggest blessing ever at the exact same time. So Cheetah, if you're ever wondering if you missed something, scroll back, right? Circle tails with that look. Tons of opportunity in gold today. Right back to the mid band, right there by those trigger lines. But 3 divergences might have taken you out of that particular trade. That one was right to the mid band, right at the lower entry point with all that momentum and a clear path. Easy money today there, right? Do you see it, Cheetah? And guys, this is why I talk about study, and this is why I talk about pictures, and this is... You tell me. Cheetah, do I have odds favorable momentum? No, don't answer any question but the one I ask. Do I have odds favorable momentum? I'm going to show you how easy this can be. No. Do I have a clear path? No. Cheetah, do I even have an area inside of triggers? Not really. So what do you think, Cheetah? Is this your best chance of success? And it really can be that simple, I promise. It can be that easy, Cheetah. But what happens is you start looking for the money and not the rules. And not you specifically, day traders in general. Guys, we start looking for where the money is. And we don't look for the rules to be met. Cheetah, be patient, right? If it's going to break, it'll break. If it's going to roll, it's going to roll. What this means is you can go grab a Snickers. You can do anything other than hope it breaks. Just let it break. Because it didn't break there, right? And it created a loser here. And that didn't break, and you lost, and that didn't break, and none of these broke. And this is kind of the cool thing, Cheetah, is when you go back and you start studying, not the money, right? I'm not looking for the money. I'm looking for the advantages. And you literally talk to yourself every time you take a trade about advantages. And I'm telling you, build one of these, guys. Build one of these. Print this out and put it on your desktop. So Cheetah, this was exactly what we just did. Did I have momentum? If you had this on your desktop and you said, oh shit, no momentum. Son of a gun, not a clear path. Holy smokes, I don't even have an entry area. How inclined to enter the market are you going to be if you just blacked out every advantage that you look for? So guys, until you can do that in your brain out loud, until that registers, do you see how maybe printing this out and making sure, insisting in the beginning that all you're doing is looking for rules to be met, and then Cheetah, I promise you, eventually you might be able to do it without a clear path, but you'll have a set of rules through your chart reading that makes sense. It won't be hope, right? And you may have one where you don't have the best momentum, but with clear path in an entry area, you're able to capitalize. I'm telling you guys, talk about advantages. Talk about advantages first, and it's going to change the way you look at the market. It'll absolutely increase your patience level. This wasn't the perfect entry because the triggers were split. Remember when I said, hey guys, This is a great time to wait for a confirmation bar, to wait for a reversal bar, to tell you, hey, we're doing everything that you think's going to happen. It never happened. No reason. Because you didn't have areas inside of triggers. You gave up the third advantage. Which means that it's hard to pinpoint exactly where the market is most likely to continue. I love it when it works out like that. And then there is your termination condition. And look at that big untradeable bounce. But all the triggers are above the fib, so now you're, guys, just holding pattern. It's crazy, isn't it? What did this look like? Right there. At 10:03. Whoa, I went way back, sorry. Was that this morning? That may not have been this morning. That might have been yesterday. That was yesterday. Oh, no, it wasn't. That was this morning. Right there, guys. Is it perfect? It's not. But if you waited for the confirmation bar, you were good. I love it. Over and over, guys. The market just moves. How many trades do you need a day to be successful? How many trades do you have to take in a week? How many do you have to win? How many do you have to lose? Guys, the one thing that you have to know before you ever sit down, that's not the one that I want. I want this one. And I gave you this sheet that I'm opening right now. 210. I love that you got a number waiting for me, Rob. Guys, there's two things you have to know to sit down and trade. And in the beginning, you're not going to know them, guys, because you're learning them, right? My wife's favorite word in the English language is grace. Give yourself some grace. You're brand new. You're under no obligation to know this on day 1 or day 101, but there's ways to get there. There's easy ways to get there, and there's difficult ways to get there. You need to know why you're going to enter the trade. 2 a day, 10 a week, that's all you need, Rob? Isn't that crazy? That doesn't sound like a lot of work. Hell of a lot easier than farming. Guys, you have to know why you're going to enter the trade. Why do we enter the trade? Because the rules are met. So if you don't know your rules, how are you going to know when it's time to enter? Does that make sense? If you don't know what your rules look like, how are you going to know it's time to enter the trade? This is why we focus so heavily on the very basic rules in the beginning. And then eventually you have to know why you're going to exit the trade. You have to have a set of rules to get you out of a trade. Sometimes it's because I reached a line. Sometimes it's 3 divergences. But when you commit to having the rules met, when you commit to learning the rules, I guess first and foremost, and you commit to having them met, guys, your rules are based on patterns that have been proven to win more than they lose. There's no reason for you to trust that in the beginning. That's why you have to study it. But they have been proven. So Tom, when I talk about momentum, a clear path in that entry area, this is a pattern that you could go back and study over the last 10 years. And your win rate would probably be somewhere in the 70 to 80% range. And it is what it is. That's why I teach it every day. And the more consistent in your actions you become, and guys, this is it, your ability to do nothing when there's nothing to do. Being consistent in the entries, typically that's when the profits come. Rob, I keep seeing you posting in the rooms. Followed my rules, making money. Followed my rules, making money. I keep seeing people post, odds favorable, momentum, clear path, getting paid. Guys, there's a reason. The problem is that we're impatient. And it's the process that yields the results, guys. It's not your desire for money that produces money. It's your ability to have a statistical advantage every time you take a trade. To recognize and realize that you are not in control of the market. The market's going to do what the market does. The market doesn't care about your mortgage or your alimony payments. It doesn't care that you need to finance something. So we just take those patterns. And we know patterns repeat themselves. Guys, do you remember this morning when we looked at this one? Where'd it go? 3 years apart. The exact same look. Do you guys remember where the S&P dropped from this morning? From the same pattern that John Novak recognized 3 years ago and put into the user guide. Learn your patterns. And then you've got to know, and this is the big thing, guys, and this is why I go back to simplicity too. And you guys that are posting, I promise I'll get it. I don't know that you've been lied to forever. I think a lot of times, so Rob, maybe sometimes we just avoid truth because we assume that we're being lied to, right? So we don't go through it. We don't do our due diligence to prove it. And that's what I'm telling you guys right now. If you go back and prove this, you're going to be with me forever. And anybody that's with me in this room that has a green checkbox next to their name knows they went through and they know it works. But this is where simplicity pays dividends, and I want to share this because I think this is important. And guys, you got this in those PDFs that I gave you. If you're in a high probability trend trade, what's it going to take to get you out, right? So you spend 20 days defining entries, and you get good at your entries, right? And you start embracing these advantages. And then you're like, oh no, now I got to do something with this great entry. And initially, it's just the KISS plan rules. It's that super mechanical, right? Eliminating the idea of fear and eliminating the nerves and arbitrary stop placement. And guys, that's not at all the end of the road for you. Not at all. You're going to begin to recognize patterns, and what's going to happen is you're going to develop a plan that you are so specific on entry that you're going to develop a plan for exits. And if you don't know your rules, whether it be for entry or exit, you're going to make mistakes, and your mistakes may be costly. And then once you add a second trade, then you've got more to think about. And this is where people get confused. People come into the room and they're like, okay, Mark's teaching the high probability trend trade, but that's boring. To hell with Mark. I saw John Novak taking 173 other trades, and I'm going to take all of his trades. And guys, I watch people who try to trade too many looks begin to confuse rules. I see people exiting with one divergence on a high probability trend trade when it takes 3 to necessitate an exit, right? And I see people getting out with a close on the wrong side of the triggers like you would in a momentum trade, but it's a 50-50 trade and the rules are still met. So you've got to keep it simple initially so that you have it in you to keep up with what it takes to get you in and what it takes to get you out. And I promise you, you're going to get there. Look at that. Z-Robot hit the divergence high to the tick, and the triggers remain below. Did anybody go long at 89.13 and they're wondering why they just lost? Don't have momentum. Don't have a clear path. Cheetah, do you see it? Rules 1 and 2 not met. That was your ability to stay patient. Price reaches Fibonacci resistance. None of the triggers broke. No reason to go long, right, Cheetah? Isn't that cool? Whoa. Odds favorable. And it's amazing to me how quickly you'll be able to pinpoint where the market is most likely to continue. But it all revolves around the large chart. And Rob, you're absolutely right. The triggers define momentum. And the triggers let you know what to expect from the areas, at least initially. And what's going to happen, Cheetah, and I'm glad that I went back to gold. I want you to see something. Is it eventually broke, right? It did eventually break. So you may develop a plan that says, I don't know if it's going to break. And once everything starts to move above it, and I think it was Steve that posted this one in the room earlier, where he said, okay, I'm not going to trade into it, but once my trigger lines and price gets above, I'll trade from it to see if it makes that next area. So Cheetah, it's that little bit of doing nothing may set you up to find that next trade, to be able to find more advantages. Because areas break all the time, guys. Otherwise, we'd be caught in a range. And sometimes we're caught in a range, right? Exhibit A. But letting them break rather than hoping they break creates a huge advantage. Good stuff. And look at the reaction, guys. Look at that push down. Isn't that nuts? And now we have what's called the gap theory, guys. When price reaches a fib and the large triggers are a full bar away, it says don't go short. Price may close the gap back to those large triggers. That's all. Doesn't say go long. I'm not going long into termination conditions. But it just says, hey, let's wait for a second. Let's let the triggers catch up. Let's get those advantages in play. So guys, second hour's done. I'm going to go take a break. I'm going to go walk around. I might even eat a banana. Who knows? When I get back into the third hour, Andrew Z, you're first. I'll click on your chart. We'll take a look at it. But guys, I'm telling you right now, days like today where things move a little slower, where there's less opportunity, you're not trading as much, these are the days we're asking questions in the room, guys. Actually, Joel, yours will be first. Sorry. These are the days we're saying, hey, Mark, let's talk about this real quick. I could use a little help with this. Or, hey, Mark, I'm just working on management. Here's what I have. What do you think? Like, give me your 2 cents. That's what this last hour is going to be. So I'll be back in about 5, guys. Go stretch your legs. All right, y'all. Let's get in that last hour. Um, does anyone remember when I said gap theory? It's likely to go back to those large triggers. This is one of the things, guys. I used to think my brother was freaking magic. Is I would see down and I would see triggers and I would go short right here and get run over. And he would draw this circle and he's like, yeah, so with the large triggers more than a full bar away, the market is likely to close that gap. And ladies and gentlemen, that is exactly what it did. So once again, patterns, right? Patterns are designed to keep you safe, to give an advantage. All right, Joel, odds favorable, clear path, perfect pullback right to the mid-band inside of the triggers, easy money. So guys, if you're working on recognition, you should be stealing Joel's picture. You should be going to your spreadsheet and you should be dropping it in there. Mine's going to go here where the world can study it. But man, you should put that into your trading plan, because that is Joel's perfect trend trade long. If it was worth the trade, Morgan, is it worth the trade to fight momentum on both charts and direction and everything says down, just hoping that an area holds? Some people will. Some people, Morgan, some people say if this has divergence on it, then they'll take a shot to close the gap to the trigger. Some people say that. Some people who aren't here today but give me heartburn will say that a reversal bar isn't enough, because reversal bars happen all day long and they'll wait for divergence or two divergences. No, not Pete. Ron has a trade that's like that. And the thing that people don't see when he takes it is that there are conditions more than, oh man, I sure hope that shit goes up. Pardon my French. Right? What looks like he's just arbitrarily jumping in, guys. If he sat down with the microphone and told you what he looks for to do what he does, you'd be like, oh my gosh, you mean there's rules? Guys, every trade has been proven, and I'll tell you, he's done a tremendous amount of study. I know, because I've been fortunate enough to work with him a little bit to do it. And that's it. So Morgan, I'm going to address that in 1 second. Andrew Z, absolutely beautiful trade. And out at trouble. Andrew Z, perfect. So Morgan, you've been using Sim trying to figure out what to look for. So what you're saying, Morgan, is that you're already making more money than you can spend on the easy ones, right? You're already catching the highest probability trades. You're winning more than you're losing. You can't seem to find any trouble to get into, so now you're looking for your next trade? I just want to make sure I'm reading that right. You know, I had someone send me a message, and I don't call people out on this one. Okay, so Morgan, you have a good hit rate with the high probability trend trade. Do you feel like, do you feel like you could make $100 a day? Pretty easy if you just stuck to the high probability? Absolutely? Okay. Do you feel like you could make $200 a day? Pretty easy. Cool. So I want you to see something. If you made $200 a day, that's 50 grand. You're like, but Mark, I want to make $1 million, right? That's okay. No, it's all right. So what if you did $200 a day per contract, and you did it on a 10 lot, and you multiplied that by the trading days in a year? Well, now you're at 500,000 from the same 200, Morgan. Just more contracts, right? And I think this is what people forget, is that, guys, you don't have to hit a home run to be successful. I promise you, you don't. And now there's the wonderful world of trade copiers. So Morgan, if you really believe that you could make $100 a day, spread it out over 20 accounts, turn it into that $2,000 on $100 a day. And you said there's no doubt in your mind you could make 200. Well, that puts you at $1 million on 20 copied accounts. Do you really need more trades, Morgan? Do you need to find more opportunities? Do you need to trade against strong triggers? Do you need to trade indetermination conditions to have more money than you ever thought possible? And only you can answer that. I won't tell you whether you need more trades or not. If you want to find more trades, I'll help you. Post them. We'll talk about it. But I think that the one thing that people don't realize is that you don't need more trades. You need trades that have been proven to win more than they lose. So Morgan, if you're on Sim, do something for me. Okay? Normally you trade a 2-lot, right? Or a 4-lot. Double your lots. Trade an 8-lot on Sim with the plan that you know you have a good hit rate. And tell me what you think. Just to throw it, that's what Sim's for, right? So something to think about. But if you go through and you start looking for opportunities, let me know. I mean, show me your pictures. Dude, we'll talk about everything. I promise we will. But so often, one of the things that I see with new users, and Morgan, you're still new, whether you like it or not, is they start just kicking butt and taking names with the KISS plan. And they're super focused on rules, right? At first we break them all, and then we're like, wait a minute, let me try it with following rules. And they start making money, and they start getting consistent. And it's the weirdest thing ever. Because the second they start getting consistent with rules, they do exactly what you do, Morgan. Well, now I'm so kick-ass, I need to find more opportunities to make money. And they never remember that you're not bound to 2 contracts, right? Let those 2 contracts pay for the next contract and just keep moving up. Just keep compounding. You'll be floored. You'll be floored. And then, Ollie, I love that you put the disclaimer in there that this doesn't meet your trading criteria, but just for the trading purpose. You assume the fibs would be broken since price already broke through that area. And then your potential entry is down here at 94, right? So no, trading book, NASDAQ. What do you mean it fluctuates more than 5 ticks? Should you make what 10 ticks? Holy shit. You're only doing 5 ticks stop loss? Why? Sorry, I didn't mean to swear in everybody's ear there. Even the KISS plan doesn't give you a number. The KISS plan says put your stop where the market shouldn't go. Hey, Roger, welcome to the room. Trading book, the KISS plan says put your stop. No. Show me where it says that. Do me a favor. Show me where it says that. I wrote it. I know that it doesn't. I know that it doesn't. I wrote it. 5 ticks beyond where the market is likely to continue. Where the market shouldn't go. 5 ticks beyond the trigger lines. That could be 15 ticks, 20 ticks. And guys, this is why we have to learn our rules. Put your stop where the market shouldn't go. 5 ticks beyond where the market is likely to continue. 5 ticks outside of that window of opportunity. My initial stop on the NASDAQ is 24 ticks, trading book, if I trade it. No, it's where the market shouldn't go. You can't build an arbitrary number. We'll go back to this because I'm doing Ollie a disservice by ignoring his stuff. One of the things, Ollie, is assume. I hate assuming. I never assume an area is going to break, right? Never assume an area is going to break. I assume every area is going to hold. But what I do, and let me show you, because guys, Ollie is throwing some wisdom down here. Can I start at the beginning, Ollie? That you recognized that that wasn't a termination condition that reversed the market, right? And this is where, guys, all the way over here, this set him up to be willing to take this trade if he were going to take it. When price doesn't reach an area but it pushes anyway, guys, this is just part of the fights in the market. And you see it here as well. Not a termination condition. It pushes right back to support and continues up. Not a termination. Pushes all the way back to support. Fails on the 50-50. And now it's continuing back up. And this is what he calls unfinished business. If you don't think that the people that control the market know where these fibs are, let's see if we can find it. I want you to see how often it happens. Where if the triggers get through, mid-band continuation up, guys. Didn't reach the key Fibonacci areas, pushed up, made it to the fibs. If you think triggers got through, not a good bottom, continues to the next level. If you don't think these people know exactly where the market, where it's going, guys, you know exactly where it's at too. It's freaking amazing. And what Ollie did is he's talking about the idea that is that if the people in control don't hit their fib, that mid-band area, right, a failed 50-50 suggests that the fight's back on, especially when things roll. So Ollie says, bad top, and I love the way you did this. Failed 50-50, divergence on a 50-50 look. Everything rolls, and Ollie says, son of a gun, there's a fib in the way. And he starts weighing it through his head, through the chart reading. He goes, wait a minute, well, it was a bad top, so they may try to make it up to that fib. And I have odds favorable, and that's pretty amazing. And I've got one line inside of triggers to take this long, and there's no divergence on the pullback, and it's the strongest triggers I could ever hope for. Ollie says, because of my chart reading, because of the patterns that I understand, hell yes, I'll take this trade. Because I know exactly where it might bounce if things go south. I can manage accordingly. I've got virtually no risk because the place where the market shouldn't go is 7 ticks back. There's one spot where it should bounce. Ollie, does that sound about right? And guys, is it a high probability trend trade? Absolutely not. It is an outstanding chart read that has you weighing out advantages versus disadvantages. And guys, that's what being a trader is all about. I've got 17 things in favor of this trade winning, and I've got 2 to 3 against it. I'm going to take the 17, guys. It's the bar fight theory. Beautiful. Ollie, I love everything about this. And guys, when you can talk through things the way I just talked through it over the course of 2 or 3 minutes, and you can put it together in a couple seconds, and you will be able to put it together in a couple seconds, this may become your trade. But until you can, termination says no dice. And you got to be okay with that and understand that eventually your trading book may open up a little bit. So, good stuff. I really like that. Nice one, Ollie. And then, trading book. I want to talk about the KISS plan. And I want you to see this right here. This is the most important thing that I can give you today. Let me go to, we're going to go straight to the user guide trading book. And I'm going to go to the trading guide, and I'm going to go to the entry pictures. And I'm going to use this one right here. I see it, Pete. I see it. I won't miss it, I promise. So trading book, great entries come from areas inside of favorable large triggers. Are you good on that one? This is where the entry is, right? This is the window of opportunity, the point where the market is most likely to continue. So the cool thing is, and I want you to read this, protective stop will go below the 1-to-1s, below the triggers, 4 to 5 ticks beyond that point where the market is most likely to continue. And in this case, your stop is about 17 ticks, trading book. On this particular trade, it's right in that 17 tick range. So your initial stop in your plan is not the actual stop. It's giving you time to put the stop where the market shouldn't go. And I think that's the biggest thing, because 12 ticks, and let me show you this right here, 12 ticks puts your stop just above support inside of favorable large triggers, which is the worst place ever for a stop. Does that make sense, trading book? So on the NASDAQ, and I'm going to tell you right now, brand new users, the NASDAQ is the angriest girl that you've ever dated on meth. No, trading book, you're not listening to me. Stops go where the market shouldn't. Stops go where the market shouldn't. In this case, it's 17, 18 ticks. So what? Those are your profit targets. Those aren't your stops. Stops go where the market shouldn't. No, so look, and this is, let me see if I can find, if I entered at the mid band, right here, at 25, my initial stop of 12 ticks would have been down here at 13. Does that make sense? My entry's at 25. My initial stop, preloaded from my plan, is 12 ticks, and it's down here at 13. No, does that make sense? This is where it's preset. This is where it shows up. When I enter the market, it's preset at 12 ticks. I have to click on that line, and I have to put it 1, 2, 3, 4 to 5 ticks below the triggers. And now it's where the market shouldn't go. Does okay mean that makes sense? Or does okay mean shut up, Mark, I don't want to talk about it anymore? I'm cool with either. And then once I get a reversal bar, my new stop is 2 ticks. That's the KISS plan. I've actually reduced my risk. And then once I reach $100, maybe I may move it to break even. And so the reaction time is this is your reaction time, 12 to 24. So if I put in the 24 ticks, look at how far away my stop is. Oh my gosh, I don't want the market to go that far, right? I want it 5 ticks below those triggers, because that's where the market shouldn't go. That's where, if they push down, I don't want to be in it. And you could make a plan where your stop loss is 50. And then if I buy the market, look at how far away that stop loss is. That's horrible. Doesn't make sense at all. That's your target. 2040 is your target. That's not your stop loss. It's an arbitrary number. Your stop loss is set. Your stop loss is set to give you time to put your stop where the market shouldn't go. That's it. And it doesn't matter, no matter what trade you're trading, no matter what market you're trading, no matter what plan you're trading, stops should go where the market shouldn't. That's good management. And that's why we spend so much time defining where the market is most likely to continue, because it sets you up for that initial stop placement. Trading book, if that's your plan, roll with it, brother. Do you know what really helps with losses more than anything else? Taking trades that win more than they lose, not jumping in arbitrarily, not having stops. How much would it suck to get stopped out right there only to have the market go up? How much would it suck to get stopped out right at the mid-band only to watch it run, right? How much would it suck to try this short trade and get stopped out way up here? So the idea is that you manage losses through having advantages. You manage losses through stops that make sense, that are where the market shouldn't go. You manage losses through great entries. Having a tight stop doesn't recoup losses. Having a tight stop is fear, and fear is a killer of day traders. Just throwing that out there. Exhibit A. Where the market shouldn't go, right? I love this trade. 50-50 with divergence, less likely to work. But look at his stop. This is a great example, Pete. Not always. I don't believe in blanket terms. Sometimes it is. Slow or fast doesn't matter. Rules met, rules not. That's the key. So check this out. Trading book, this is a great example. His entry's at 85. His stop was beyond the large triggers where the market shouldn't go. In this case, it was 15 ticks. Completely reasonable stop, 100%. Made sense. And Pete said, with this look, this is where I'm no longer willing to be in that trade. But as long as it stays inside of those triggers, I'm not giving it up. They're going to have to come get me. And I bet when he entered the trade, it was probably a 12-tick stop. And he said, oh crap, that's too close. Let me put it where the market shouldn't go. Does that make sense? And then the same thing here. He entered the long. And Pete, you were in at 94. And your stop was probably what? 88? 6 ticks? Where the market shouldn't go. So 15 on this trade, 6 on this trade. Didn't do anything to recoup losses, didn't do anything other than put it where the market shouldn't go. But taking the one with momentum and a clear path paid larger dividends than the one without a clear path and divergence. And that's what I want you guys to get. Pete knew what he was getting into taking this trade. But Pete, wouldn't you say that this one was much less stressful, much easier? You probably felt more excited about this one than this one. And that's the thing. So Trading Book and everybody else in this room, not just Trading Book, especially my newer users, momentum and clear path. If that's your battle cry, your life is going to be a lot easier. Your trading is going to be a lot less stressful. And then Morgan, do you need a 50-50 with divergence to hit your goals? If you just turn around and catch this one, it's easier on the high probability trend trade. But Trading Book, it's boring, right? But when you're doing accounting stuff, do you ever say, man, I hope this guy lost half his receipts? How kick-ass will that be to work harder and struggle to find the results? Never. You never said that. This is everything in order. And oh my gosh, it's easy. It's so easy. All right. Well, you do what you want. Guys, that's the beauty. Is I'm not your dad or your husband or anybody with any say in anything that you do. My job is to teach you guys to read indicators, and my job is to point out that there's an easy way to get to where you want to be, and then there's an ego-driven, hard way to get to where you want to be. You have to make the decision on which one you want to be a part of, right? If you're a golfer, do you chip it out of being 20 yards deep in the woods, or do you try to thread it through a 2-foot hole, right? You already missed the 100-yard wide fairway. What makes you believe you're going to thread that hole? Get it back into play, guys. This is staying on the fairway for you golfers. Great stuff, Pete. And beautiful recovery. Just because the trade doesn't work doesn't mean that there isn't one right around the corner. I know I get a little preachy sometimes. Mark, how do I break my rules? Mark, how do I find more opportunities? Guys, there's a billion of them out there. There's so many opportunities out there. And this one would have stopped you out, right? But not before you maybe had a chance to manage. And there's that darn gap theory again. Price reaches resistance, or reaches the mid-band. The large triggers are a full bar away, and it closes the gap yet again. And then Ollie's idea that when they don't reach the fib and they go to the mid-band, guys, is there unfinished business? You wanted some risk? Trading book? All right. Whatever makes you happy. I don't know what you're talking about. Have I seen what? Did you post it in this room? If you didn't post it in this room, I'm not looking over your shoulder. When did you post it? When did I miss it? Oh, there it is. Why is it 50-50? I'm going to get you now. When is the, see? So, guys, when you're going to branch out, you got to make sure you know your rules. So let me go back to this one. We'll start with this lesson. The mid-band is a termination condition. The mid-band is only a termination condition, trading book, if the large triggers are a full bar away. That's what we just saw right here. The mid-band is a termination condition if the large triggers are a full bar away. If they're not a full bar away, it's nothing more than a squiggly line on your chart. So what you had was odds favorable momentum. You had a clear path even. You take the perfect entry, absolutely beautiful. You get paid. When divergence prints, you get out. I love everything about this trade, trading book. I love everything about the trade. But there's some NASDAQ stuff that's different than crude oil, that's different from the S&P. When you come back to this area and those small triggers are so strong against you, it is absolutely financial suicide to fight them. So there's nuances on the NASDAQ that don't come into play on the crude oil and the S&P. And the whole reason, let me show you something here. This is what people forget. If this was crude oil, this would be a 13 and this would be a 5. On NASDAQ, this is a 34 and this is a 13. Your small, fast entry chart on the NASDAQ is 3 times larger than normally, and this is what it takes to slow it down, which is one of the reasons why, the same reason I use these triggers for momentum on any other market, I can't fight them. You did this trade beautifully. Absolutely wonderful trading there, trading book. But the stop goes where the market shouldn't, beyond the triggers until the reversal bar. If the large triggers are a full bar away. If the large triggers are a full bar away. I'm not sure what picture you have. Yeah, it may act as support. It may act as resistance. And it may. This is just a roadmap. This isn't rules, trading book. This is just lines on a chart that may stop the market. In that one specific line, yeah, if the triggers are a full bar away. Good stuff. I have to see stuff like that. I love it when you guys point that out because it means that I get to go through and make sure that I'm clear. Steve Diego, everything is up. Price reaches support. This doesn't make sense. Hold on. 18,720. 29.50, 29.50. So you're right at the mid band. Okay, there's your entry. Everything is up. The triggers are slowing down. You take the entry. I love it. Get paid right at the divergence high. And you know not to stay in. I like it. Great trade. That took me a second to get there. Because it didn't last, right? Third divergence in the same price range killed it. And you made money before it failed. Great job, dude. This picture from one of my NASDAQ trading videos was the rule set used to take your 10 the snap from. The separation between the small and the large. And the small trigger's probably a full bar away helps. Good stuff. All right, Pete. Large chart looks good. It's a 50-50. 2 divergences is bad news. 3 divergences is horrible news. And I'm glad you were able to get a little bit out of it. But once again, not a clear path. First entry, I like it. It just didn't work. Third divergence said nope, and you take a 2-tick loss. Pete, would you agree that taking a 2-tick loss isn't nearly as painful as taking a 22-tick loss? And guys, this is one of the great things about the precision that we can begin to develop through our chart reading, is small losses become a very real thing. And when you're losing $50, but it makes it easier. In your initial stop, notice that it doesn't go below the triggers, everybody, until things really start to go sideways. And even then, it still hasn't gone below the triggers. Yeah. You took a shot, right? For me, 50-50, 2 divergences, my own personal plan, that's a no dice trade. I don't like giving away that much momentum when the area is not broken. Initial stop was 14, right? And that's cool. That's not a huge deal. I love it. Great job. I love seeing how you guys take the basics and begin to turn them into trades. And check it out. So, trading book. Now the mid band is not behaving as a termination condition. And it still may hold. But because the large triggers aren't a full bar away, this technically isn't a termination condition. But I don't have odds favorable momentum, which may be one of the challenges there. But see how here it fits the rules, termination. Look at the big untradeable bounce. Here it doesn't quite fit the rules, and they appear to be trying to push up with every indicator up. Kind of cool how that works. Three divergences in the same price range on gold. Well, I don't know which video you're talking about. Okay. So You're using a 10-2 though, right? Not a 13-2? Cool. So the 10-2, that's a 13-2 trade. So on the 13-2, if the smalls are a full bar away, or if they're less than a full bar away, I wait for a close on the correct side. If they're a full bar away, I buy at the area. So absolutely, you did it. But on the 10-2, Steve, one of the things that I taught every day is on the 10-2, if divergence prints, and you know what, let me do this real quick, because I meant to hide but I may have deleted. Let me not save that, and let's see if my NASDAQ one comes back up. There we go. On the 10-2, if there's divergence on the high or the low, I wait for a reversal bar, because it is a little bit quicker on the NASDAQ. So I'm not using the trigger lines so much. I'm not using the small triggers so much. I think what you did was a great kind of combination of the two. Recognizing that the triggers were so far away made it easier for you to enter that trade. My own personal rules were wait for a reversal bar. But I think you nailed it. It gives you time to manage it as it goes back to the triggers. Because the small triggers were all the way up here, you had time. By the time it finally hit the triggers, you're already up a lot of money, right? And you've already established your risk and you're good. I like it. I think that you did it really well. But for me, I like the reversal bar just because you're on the wrong side of triggers, you're losing momentum, right? I try not to put too much faith in areas on the wrong side of triggers, just because I've been run over so much, and the NASDAQ is such a pain in the butt. You pay a little for confirmation. You do. There's a payment for confirmation for sure. But yeah, you had it dead to rights. Those small triggers so far away, it makes sense that they'll close the gap because it's such a large trigger or large chart. So I like it. I think you did it really well. The only thing is you took the 13-2 lesson and applied it to the 10-2. But I think that it worked well for it. Three divergences in the same price range. Guys, you see it on the small chart too. If you see it on the large chart, giddy up. Didn't need a fib, right? Didn't need one-to-ones. Three divergences in the same price range may terminate the trend. Gold scares me. It never made it more than 4 ticks below the triggers here. How crazy is that? Never made it more than 4 ticks below the triggers there. 1, 2, 3, 4 divergences in the same price range. And there's the push. Guys, do you see how things don't agree? I want you to see inside of that one bar. Look at all that. In the last 2 bars, all of that indecision, all of that dancing around. What do you guys want to talk about? We got a few minutes. Good stuff. A trading book, you asked, the gap should be 1 bar to be a termination condition. Absolutely. Let me show you how we gauge that. So your reversal bar marker, are you familiar with that, trading book? What the reversal bar marker is? I'll do better than one picture to save for study. Here is, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. There's at least 17 in the blue column where you can see the gap theory. But let's go through defining it real quick so you have a basis for when you're looking at all those pictures. And there's even more trading book in the termination conditions section. But the gap theory, simply said, is that if price pulls away from the synthetic triggers too fast and too far, hits an area, whether it's fibs, mid-bands, yellow one-to-ones, it doesn't matter. Price is likely to close the gap back to the triggers. That's what the gap theory says. So what I do is when I reach one of those areas, and in this, if this is the mid-band, all I'm doing is when I reach that area, fibs, the fib is a termination condition, and this is, I guess, what I need you to know. The fib is a termination condition because the triggers are so far below, right? That fits the rules for terminations. That fits the rules for terminations. That fits the rules for terminations. So you shouldn't be going long anyway. If your trigger lines are below the reversal bar marker, price is likely to close the gap. That's all it says. It's not a trade. It's not an entry, right? All it is, hey, don't go long into that mid-band. And where was it in the live market that we were just looking at? All it is, hey, don't go long into that mid-band. So you begin to recognize this typically about a bar late when you're brand new. But this is the end picture. Here, I'll give you this one too. I'm not sure that this one is in the spreadsheet. You can put it into yours. And this is what it typically looks like after, right? And all it says is don't go short. Because what happens, trading book, is people start going, man, look at the momentum and everything's going down and life is so good. I'm going to take that short. And you just end up getting stopped out when it closes the gap. So it's a little protection for you is what it is. So, and let's see what it looked like when it hit the mid-band here, right? Goes in, hits the mid-band. And if you're like, I'm going to go long right here because holy smokes, look at the momentum, you probably got stopped out. It's just a little patience piece. But it's fun because if you go back and look at the charts, this one didn't even have a mid-band, but because the large triggers didn't follow, it closed right up to the large triggers. Here it hit the mid-band. Look at that. There it is again. And some people go, dude, Mark, check it out. Strong bottom, full reversal, odds favorable. I can't wait to go long. And they get run over when the gap theory gets them. There it is again. I was watching that one live with John Novak this morning. He goes, gap theory. Don't go short. There it is again, right off the mid-band. In normal time without gap, nope, the only time a mid-band is a termination condition is when the large triggers are a full bar away. Absolutely, perfect trading book. Great question. And guys, I'm telling you right now, and I tell people every day, you're going to take these very basic lessons, right? You're going to take these very basic ideas of momentum, and you're going to take this very basic idea of termination conditions, and you're going to take this very basic idea of only one entry. And this is designed to optimize your chances of success. This is designed to give you the best of the best as a new user. That's it. And then what you're going to do is you're going to start growing outside of it. You're going to start recognizing things. And you've got to do exactly what Trading Book's doing. Hey, Mark, here's my picture, here's my trade, and let me show you exactly how this worked. I think you reposted it. All right. Hey, Mark, here's my picture of my trade. And as soon as he put not a clear path and labeled it 50-50, what it did is it opened up this awesome discussion for, guys, when is the mid-band a termination condition, which led to the awesome discussion of the gap theory. And this is why telling me what you see is so important. In Trading Book, just props. You're doing it perfect. When you tell me what your chart read is, guys, if it needs a little help, we'll turn it into a lesson. But until you post in and you call it something, the wrong name, right? Or you say, and even Pete, who's got a wealth of experience, when he calls it a clear path, but it's actually a 50-50, it opens the door for a cool lesson. Because once you start getting these, you realize that things have to be managed a little differently depending on the type of trade you're in. Good stuff. These are the pictures that I love more than anything. I love the pictures where there's a little problem with the chart read, because everybody in the room that's listening gets better at their chart read because of it. Doesn't change the fact that this was a beautiful trade. And then check it out, Steve Diego. Small triggers were a full bar away on the entry. Did you see that? Did you notice that? So he had that same thing going that you showed all the annotated charts for. So Trading Book, if you're going to trade the NASDAQ, you should steal this picture from Steve about entries on the NASDAQ. It'll change your life. Constantly learning and annotating the videos and pictures. Here you are explaining the reason for the short off the mid-band on the 10-2. Use this as your last trade. Triggers are a full bar away. Everything says down. Triggers are a full bar away. Take it. Run with it. That's awesome. And Steve, thank you for taking the time to study, to go back, to make sure you understand it. And guys, I've watched a million of my brother's videos, and I'm not going to lie to you, I couldn't decipher a thing he said when I was brand new. Ooh, voice crack. Couldn't figure out a thing he said when I was brand new. So I just went to him. Hey, John, in this picture of the video, this is exactly what you talked about. What did you mean? And that's what Steve does. Steve's like, let me go back and look at the videos. Let me make sure that I understand the lesson. Let me ask a question about it. And you're just killing it, Steve. Great job. You too. Everybody in this room. So proud of you guys. So Tom, how do we do today? Give it a couple days. Everything will start to come into place. I promise. It's a little overwhelming. It's like drinking from a fire hose in the beginning. But it does get easier. And I think most of the classroom will back me on this. If you allow it to be as basic as possible, almost like it seems too easy, that's when you're going to get to where you want to be the fastest. Just break it down into these simple concepts. Momentum and a clear path, with the understanding that once you can figure those out, Z-Robot talking to you too, once you can figure these out, guys, there's a million entries. And this is stuff that you can do on gold. My friend Christine was trading Ether futures with the same patterns. The exact same patterns. We did feeder cattle in here once. Exact same patterns. It is a little bit in the beginning, so keep it focused. And then Tom, just promise me that you'll ask questions. Don't suffer in silence. You can't ask too many questions. There's no such thing as monopolizing class time. You can't. Because if you're the only one asking questions, shame on everyone else with questions who isn't asking, right? That's the beauty of the room, guys, is I'm here 15 hours live every week, and all I want to do is answer your questions. So you can't overdo it. Let me stress that. You can't ask too many. And the best questions are asked with an accompanying picture. Hey, Mark, is this a termination, right? Get in the habit of having that conversation through pictures. It pays huge dividends. It really does. You don't plan to stay here forever? Oh, that's all right. That's my goal. Trading Book, my goal is that all of you guys fire me. is that all of you guys get so comfortable in your plan that you fire me. There's people that still come here and they keep the room up because honestly, trading's lonely sometimes. It sucks to sit at home with nobody around, and it's nice to pop in and get the conversation. There you go. Keep me as 911. Phone a friend. Absolutely. Absolutely. And look, it eventually went back up, right? It really is, Pete. And I think what happens a lot of the times is if you don't have a trade set up for 45 minutes or something or an hour, you'll start to get in your own head. And I think that a distraction is good. And it doesn't have to be this classroom. I keep a sketch pad. I always have pen or pencil and paper. And I draw. I just draw. And I do anything other than break my rules. That's my goal. I'll play solitaire on a separate screen. I'll go back and forth with my brother on Skype. I'll get up and go play with the dog. I'll do anything. Anything other. And yeah, Paul, amen. It's okay to take your time. It's okay to take your time. The futures markets have been around for a long time and they're probably not going anywhere. And as long as they have a little bit of volatility, as long as they're going up and down, we'll find our patterns, guys. We will. It's what we do. So yeah, trading book, I can't wait till I go 911 status for you. Tom, if they set up, I'm not opposed to it. But the one thing that you'll find is that watching me trade isn't going to do anything for you. Because all I'm going to do is I'm going to go through rules. But the things that you may find helpful is that first, ATM strategies. What a great way to finish class. I think that you can get a lot of stuff done without actually taking a trade. So making sure that you have stops and targets in place. That's your ATM strategy. And then let's say hypothetically I just go long. My ATM strategy sets up my targets and it puts my stop in place. So I can practice things like moving stops, right? And I can practice things like moving targets, and I can practice things pulling back and moving forward. And let me close this one out. Explain how they fall into place? For sure. So if we're live right now, right, Tom? I don't have odds favorable momentum. Do you see it? Smalls are inside of the large, not outside of the large. I don't have the advantage of momentum. So what sucks is when you guys rely on me, Tom, I just have to say, all right, Tom, not a damn thing to do. I don't have momentum. I do have a clear path. I don't have areas inside of favorable large triggers. And then I just have to say, well, Tom, we just have to sit on our hands now, brother. And you're like, well, this sucks watching him trade live. He's doing nothing. But 90% of my day is literally doing nothing, which is why I encourage you guys to not rely on watching me. And that's okay. Everybody asks, Tom. Everybody asks. But one of the cool things is you can scroll back, right? And you can look at it just like this. And you can do this without me. There's odds favorable and everything up. And you can talk through rules, and we can take pictures, and we can talk about why that's a termination condition. And we can talk about the gap back to the triggers, and we can talk about not having the entry rules met. And you can go take pictures without taking trades. And Tom, I think that the dividends are paid from seeing this picture when the market isn't moving, because it means that you know exactly what you're looking for when the market is moving. And if you commit these looks to memory without the pressure of taking a trade, when you go to the live market, you say it as quickly as you just did. Well, hell, I don't have odds favorable momentum. I probably don't have a trade. But I don't mind doing it, right? Like right now, I've got odds favorable. I haven't reached the area yet. And that was your pullback to the area inside a trigger. So we just missed this one. And this is the other thing. When I start jumping, looking for it, that's it. And I always liken it to, you know what? If I watch Tiger Woods go out and shoot a 62, it doesn't do me any good, right? Like, I still suck on the golf course, Tom. But if I go through and I learn the mechanics of what it took to hit that ball straight, if I go through and I learn the mechanics of what it took to not slice, to not hook, right, to not duff it, then what happens is, because I know the mechanics, all I have to do is practice them. And nobody can do the practice for me. I have to do it. That's where the repetition comes in. And eventually, it works out. So if I get a pullback without hitting that pink line, I'm looking for this line. But if I hit the pink line, then dagnabbit, I've got a termination. So guys, always ask. You are probably the 800th person to ask me to trade live in the room. And if it sets up while we're talking about it, I always will. We'll pull the trigger on simulator together and talk about it. No, I know you're not. I know you're not. And that's why I'm like, okay, price reached the divergence high. I don't have a clear path, even though I have odds favorable momentum, which means that I'm not going to right click and I'm not going to activate a limit order at support inside of triggers, because rule number 2 is not met. Does that make sense? Or what I could do is I could say, you know what, guys? Let's break our rule and let's buy 2 at the area inside of triggers, and let's see if all this momentum carries us up. But then I have to say to the classroom, does everybody recognize that the path isn't clear? Does everybody recognize that 2,500 stopped it to the freaking tick and pushed it down? And then, Tom, when I lose in front of you guys trading into a termination condition, you don't call your wife and go, man, Nexgen sucks. I saw him just take a loser. And people do that. But this breaks the rules. But what can we do? We can still talk about how we have to right click to activate a limit order. We can still talk about how we wait for the pullback. And we could even talk about exactly where the stop has to go if we get filled. So there is some value in it, without a doubt, if we do it like that. But if all I do is just go, man, termination, no trade, and refuse to activate that, I guess that's rule adherence. All right, so here we go. We're in at the area, 5 ticks. 1, 2, 3, 4, 5 ticks. Boom. This is where the market shouldn't go if this trade's going to win. How cool is that? Where's $100? $98.50. We're in gold. I would have to get to $99.50 for $100. I would have to get to $05.50 for $200. So are you with me so far? Not a clear path. I'm breaking my rules. I can still pinpoint where the market's likely to continue. And if we're following the KISS plan, well, I already broke it by breaking my rules. But what I can do is say, if I get a reversal bar, then I'll reduce my risk 2 ticks below that reversal bar. Beautiful. Everything says up, right back to support. Keeps going. Nice one, Pete. If I hit my first target, I go break even. And guys, look at this. I'll hit the first target before I get a reversal bar. And I don't know what's going to happen. How cool is this? So Tom, rule number 2 is not met, but with this level of momentum, with this area inside of triggers, I've still got a fighting chance. Look at that. I just made $100 and now I have 0 risk on the trade. And since I know that this line can stop the market, maybe I say, if they give me a reversal bar, I'll exit. Or maybe I say I'll take profits at that line, right? And just get paid at a line that could stop the market and not hope that it breaks. But even that was $220 right in the moment. $220 right in the moment. And I just traded back to the termination. With all that momentum, And I got in 2 ticks above an area inside of favorable large triggers. And I got paid because that's the goal, guys, every time. So Tom, brother, I promise you, if this happens when we're looking at it, we'll do it and we'll talk through it just like that. Every time. But it's 12:03 and guys, I'm getting staples pulled out of my head today, so I got to go get ready. You're very welcome. Thanks for asking. I always try to be helpful. All right, one more and then I got to go, guys. I got a doctor's appointment. Same trade as Pete. You're welcome, Trading Book. Thanks for keeping asking questions. Everything says up, right? And I don't worry about pink 1-to-1s, Ollie, not on this chart. Market flow signal, but no rules are met. And I think this is the challenge, Ollie, is you did get a market flow signal. Everything says up. And I think what your 3-year-old is pulling you. You wait for the confirmation because it's not the perfect trade, right? It's not an area inside of favorable large triggers. Everything says up, and Ollie says, you know what? I'll wait for confirmation, and then I'll take the entry. So good stuff. Definitely, Chris T. We will. I'm not sure when I'll be out there again. We've got about 3 more months in Dallas, and then we're going to move back to Austin. So it'll probably be spring before I make it out there to bug you guys. I keep trying to talk my brother into doing a seminar. I think it'd be fun to get some people out, do a seminar, maybe have the Nexgen golf scramble or something like that. Great trade, Ollie. I love that you wait for confirmation when it isn't perfect. That's it. And that's how you use it, right? It's almost perfect. Little confirmation for the win. Good stuff, guys. Are you really, San Antonio? I like San Antonio. I always have. Man, if I was in Austin now, I'd come have a beer with you in San Antonio. It's only an hour and a half. And I think Texans are the only people that say that. Yeah, I'll drive to San Antonio. It's only an hour and a half. People in small states can't fathom the idea. If you live in Houston, Houston is literally an hour from Houston. You could stay within Houston driving for an hour without traffic. All right, guys, I'm going to call it. You guys have an amazing afternoon. Trade well if you trade. Take pictures. Same with SoCal. Yeah. Man, the highways in Southern California scare me. San Diego driving is terrifying. There are so many merges, and nobody likes to merge. San Diego terrified me. Guys, have an awesome, awesome afternoon. I will see you tomorrow morning at 9 a.m., and we'll do it all over again.